we can do better than this. That's Wolfman Jack. That's been down for you.
I just can't get any relief. I've swallowed my pride for you, lived a life for you, but you still make me feel like a thief. You got me stealing your love away, 'cause you never give it. Feeling the years away, and we can't relive it. Oh, I make you laugh, and
You make me cry.
I believe
It's time for us to fly.
You said we'd work it out. You said that you had no doubt that deep down we were really in love. Oh, but I'm tired of holding on to a feeling I know is gone. I do believe that I've had enough. I've had enough of the falseness of a worn-out relation. Enough of the jealousy and the intoleration. Oh, I'll make you laugh, then
You make me cry.
I believe
It's time for us to fly.
Time for me to fly. Set myself free. Time for me to fly. It's just how it's meant to
Be
I know it hurts
to say goodbye. Time for me to fly. Yeah, yeah, yeah. Need to fly.
From sharing announcements and filling jobs or shifts, to communicating schedule changes,
Good morning, retail traders. Good morning, good morning, good morning. REO Speedwagon, time to fly. I saw that band 8, maybe 9 times. Worked up a sweat with that one. Okay, let's go over the watch list. Okay. Well, we got the bottom support on the IWM. I don't know about the bottom, but that's the second one for 194.56. Megaphone on the SPY didn't work. This dropped more. So let's pull up a bigger chart. Netflix, I got a trend line on the top of this flag. I already had it on there. Yeah. SPY, man, look at that SPY. God, that looks good. We got a head and shoulders on the SPY. We got a head and shoulders with an ascending triangle. That even looks sexy. That looks sexy as heck. We might have something here today. We do have a lower support, but man, where in the hell? That's a double right shoulder right there. Then you got an ascending triangle to boot. So this might be a good breakout stock today. I'm going to leave that extension on the way up, and I'm going to call that resistance if we bust past. Bust past that. The 50 SMA on the 130 minutes. Huh. 30 minute. What? I've never trade off a 30 minute. There's a symmetrical flag there. There's a pivot point right here. So inside this flag, there's a pivot point. Right there. 497.18. Someone said 495 in here. Did I read that right? Man, that was a workout. Oh. IWM's at a double bottom. IWM's at a double bottom. I'm going to give this to Vegas. She was trading it yesterday. La 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 la. I blocked Yoko. What happened? I like Yoko. I'd say, what I want. If you can't take it, it's your problem. What happened in here? Yeah, we're a huh. We love each other. I didn't see what happened, but be kind to others, that's all I ask. Some of us are beginners and having a hard time, and some of us are little, struggling. Some of us aren't. Some of us are real good and confident. Like me, myself, sometimes I get a little frustrated because I've tried to express something that I want to get across, and sometimes I don't think I get it across well enough. I kind of hold it in. But we got to learn to be polite and help each other out and respect each other. Just kind of back up a little bit and relax. Yoko. Yabba dabba doo. Not a good way to start my music out. Learn to fly. It's like I said, it's sometimes, this is a very emotional game. Emotions can get to us real fast. I've been there many times where I've made mistakes online and cussed out some of the best traders that, not really it's easy to get offended when your emotions are so high and you're trying to help each other, and we just don't want to break anybody's heart and start the day like that. I had a nephew one time, and I had a thing about frogs. I loved frogs. So we saw this little bitty frog on the ground, and he stepped on it and smashed it. And I said, "What the heck did you just do, man? You killed that frog. He had nothing against you." I said, "What? Why'd you do that?" I said, "Man, I don't like that." And I cussed him out. I said, "You don't just smash a frog." My dad we went frog gigging one time, and my dad lost one of the frogs in the back of the trunk. About a week later, Mom says, God, what's that smell? Oh, there's a frog in the back of the trunk. I just couldn't find it. Yeah, outside of chat. Keep it outside of chat. I cussed one guy out one time when I was in Vegas's room, and this guy, I get in here in the morning, call out trades, and he didn't like it. He didn't like the fact that, because he wanted to hear the scanner. So he got in the room and put out a big old essay trying to tell me how to do my job. And I went behind, I didn't say nothing to him in there. I just took it behind the scene, and I said, man, I got pissed off. I went off on him. I said, I don't care who you are. If you got something to say, take it private. Don't let the floor see it. Let's go. SPX hit my support. Damn, look at the... Watch SPX right now. I think we can get a dead cat bounce. Well, not a dead cat, but a bounce. I didn't get my platform set up. Hey, June. Man, it's a hard sell. What's going on this morning? Pulled too much forward outlook on current price action. The market has pulled too much of a forward outlook. See, this is what gets me. I'm not listening to TV. We're way overbought. I swear to God. And now they're coming out with headlines way too late to tell people that. The market pulled too much with a forward outlook into current price action, says Citigroup's. Where's my platform? Where are you? What was I looking at? SPX. SPX, the 25th. God. Okay, the 50-30 strikes. Watch them close. You could probably maybe do the 50-35s. Now we got what? We got a hammer. That's bullish. That candle right there is bullish. So let's see if this bottom of this wick holds, and that's where I'll take the trade. Okay, this is the 50-30 strike. I'm watching real close here at 430. 440. $50-30 strike at 470. You got one contract. Lotto. It's just a risky trade. Three black crows with a hammer here, holding the bottom. Ah, damn. It's hooked. Okay. Nail it, Bobo. Come on, baby. $5.10. What went down? I'm still in it. I should have probably sold it there, but this is the retest, I think. Could grab one more and take a bigger risk. Yeah, I'll do that. Well, not too late now. Shit. Oh, could have got it at $4.10. $4. Which one? No, the 530s. They're at 460. 410 now. Here we go. $3.90. Man, it's got to hold. Grab one more at $3.90. So I have one at 460 and $3.90. Remember what I said on the weekly? We got to hold this support right here on the weekly. That double bottom. And that's low. Damn, we did. Oh, that's the weekly. That's a pretty good drop. That's 40 bucks. 30 bucks. Netflix held support right off the bat. I turn it. Now it's 360. And that's bearish. Tesla. I'm still in this trade. God, look at Tesla. Nice. Oh man, I should have spotted that. That's nice. Tony and Jim's watch list is down, Apple up, and NVIDIA, the only two good ones. I'm still in this one. We got Meta down 14% at 420. So it didn't touch my support at 410. I'm still in there we go. Come on, SPX. Let's look out. This is too big of a gap. It's going to go up. Maybe. That's my confidence. Too big of a gap. Anybody take this trade with Bobo? You had a chance to buy it cheap, maybe. Oh yeah, break it. We're at 470 and I got a 425 average. And I'm going to keep holding on to it. I think we're going to go higher, but this candle right here is your resistance to break. $5.30. Average is 425. How'd 470? I'm up 150. If we break this resistance, we'll double top. Then we could have a, well, something brought this market down today. Does anybody know? Besides Apple earnings, IBM, and not Apple, but Meta, Cat. That's what brought it down. And IBM. The meta's rebounding a little. Oh, snake breakout pullback. Snake breakout pullback on the hour. I wasn't watching it. We got the VWAP on the SPY. VWAP on the SPY. Ooh, AMD took another hit. No, it didn't. I mean, Amazon. AMD is bouncing. Meta has a resistance level to break a 1, 2, 3. There's your 1, 2, 3 on the symmetrical flag. Hey, little sister, what is going on? White wedding, yeah. 5:30. Keep going. Give me a grand. Give me a grand. This is my land. This is your land. From California to the New York Island. This land is for you and me. Now, if we hold the 9, your land, this land is from California to New York Island. Oh. Damn, back to 390. So far we're consolidating now. We're coming back to a double bottom higher low. 3-minute sell off. I could have got out with 150 on that. But I'm going to hold on. We're retesting now. So this will probably be the last time we should pull back. If we start to bounce up or we tank. Visa had good earnings, or are they coming out? Snake breakout, pull back, higher low, boom to the double top now. That's the sequence. See if it performs. Bitcoin ETFs are down. Bitcoin ETFs are down. And I'm down now. Damn it. New low. I didn't want to see that. The market pulled back too much. Market pulled too much. Finally someone that agrees with me months later. Scott Cornett, City U.S. equity strategist. Come on now. UAL's pulled back a buck. Disney at 111. Amazon down $5-6. Google down $6.50. Come on now. I might have to take a small loss in this if I don't. Where's SMCI? Is it not on here? 212. And I got 710.59 for, and we hit 718 yesterday. Netflix up. Anybody trading Netflix? Come on. We broke the triple top on Netflix. Whoops. Damn it. Oh, I gotta watch my trade. Yeah, I think I'm screwed here. Let's see. Still hold on to it. I'm down 2.50. Hit the 1, 2, 3 on Meta. Got $3 now, so I've got total of 4. Nvidia, Netflix, Tesla are up. WFC had a top. What the heck's going on today? Goldman Sachs and the Bank of America shareholders reject proposal to separate chair and CEO roles. God darn it. No mercy. I got one down. Oh, I got one. I'm going to have to load the boat on this one, I think. Supreme Court begins hearing arguments over Trump bid for criminal immunity. U.S. Supreme Court begins hearing arguments over Trump's bid for criminal immunity. America. Well. Thought I had this one. The S&P break doesn't mean it's time to be a uber bear. Stock commodities pricing and no landing scenario. Stock and commodities pricing at the top of no landing scenario. Well, if I get to 275, I'll be down 400. Meta back up to the top. Netflix has a flag. I need 375 to break even on the SPX. I still think we're good. We've got a wedge. Well, that's a trip. That's meta. See the wedge? We have one little bump above it. Now we have almost a whole candle. In the halls of Montezuma, to the land of Tripoli. Yelling, we're on a downward path for inflation. Smelling, yelling, yakking? Is that what it is? Hey, I'm looking better with $3. Break the 21. We got snake, falling wedge. You got out at 50 cents stuck in the rest. Did you add on to it? I think we're getting ready to break the 21. It's really important that we break the 21 here, and that'll be a real confident kicker. Ah, darn it. I usually add, if I'm bullish in a stock, I'll add on the dip, but we're getting ready to squeeze right now. I'm not quite bullish today, but we've gapped down so much. And not enough. Let me see. I can't hardly see it. Oh, take it to the early. That's the support level there. Man, this looks so, it looks good. It really does. Got snake breakout pullback. Higher low. 5 more bucks. I mean, up. I'm green. Now time to bake a cake. But what a stressor. Time to bake a cake. Time to bake a cake. Anybody in this trade with me still? I'm still going. I'm going to take it to the double top. We're going to break this resistance. We got the 50 SMA to break. That's going to be hard. $420. I could get out here, but I want to break this. I don't have confidence in this falling wedge. You know how to count to 3. You can trade with me, but if you can count to 4, you might make a little bit more. That's right. Damn, I just missed it. Get back here. 1, 2 bits, freebie, 4. 1, 2. So it didn't stick around at the bottom very long. I've been at this a long time, so when I'm stuck in a trade, I try to work it out. Or sometimes where you just can't work it out. I mean, I was down $400 on this trade today. I got an average of 325, 375. Yeah, it's 375. I thought it was 325. Sometimes you can't work it out. I was reading an article yesterday that Elon Musk got burnt by a toaster or something. I said, what? He's in the hospital. Butt naked. You mean on the SPX? What am I doing here? Five oh 1990 506. Hey. Did you mean 508? No. I meant 506. $506.83 to break. I picked up some BT on the pullback. Did you get out, Ricky? Yeah, Jim means average down. VIX turned down. Oh! $5, $5.50. Jim. No. $5.50, baby. Woo! I'm all choked up. Boo-hoo. Oh, yeah, yeah. I was told not to mess around. I was told that I was a clown. And when I got bricked it. Old MacDonald had a farm. He got out at 5:50. Me. We were warned about the pop right on this message. Very good, Mike. Now, what am I thinking? I'm thinking boing. Whoops. Should I stay in the trade? Hey, I'm going to share that bug in the room. Whoa. Break. Break to 63. This thing ain't moving. Pretty close to, I mean, this thing's really testing us right now. I want to get 700 on this call. I got 2 calls left at 375. TSM? God. How'd I miss that? I think so. Don't forget to put your alerts up in the alert room if you have time, but don't make it. Your trading is more important. Only if you feel like you have the time, because every second matters. Cross is coming. Let's do it. Magnificent. How do you like it now? Can you hear me now? Magnificent. Can you hear me now? Do-do-do-do. Oh. What am I doing here? Lift. Dan. So lift. Pulled back to a double bottom here at 1579. What the hell's wrong with that smelling yelling? Why do they want us to go to war with China? We're in the middle of 2 wars. Can we just leave shit alone? Okay, now yesterday we got Ford at a double bottom with a lower low. So we've been trading Ford. Now, I'm going to suggest every time we get a pop on Ford, get out of the trade. In my opinion, Ford sucks. That's just my opinion. That stock should be a lot higher, to tell you the truth. We got a symmetrical flag on Nile, but I'm not eager to trade it. Boeing pulled back Got a little squeeze on Boeing right now. And Baidu's had a big flood in Dubai. One of the worst rainstorms in 90 years. Netflix pulled back to support. You got a 1, 2, 3 ascending triangle on, or a symmetrical flag on cat. So the Tony and Jim's watch list. Meta. Bank of America pulled back. There's the pump on Morgan Stanley. That one chick was bragging about Morgan Stanley. I wonder if she took her profit yet. See, we had... Okay, let's say I'm in Morgan Stanley. I bought the snake, breakout, pull back, and I'm at resistance. When you're on a chart with a 1 hour time frame, that's a resistance. So when you hit that, you got to get out of that trade. Snake breakout pullback on the SPY. Head and shoulders set up on the SPY. I'll be right back. Everybody get out of SPX okay? You should have. What was that? Wow. This is strange. This morning I put a sky picture in the room, and 9 years ago today, I put a sky picture on Facebook. You see the number in there? Right in the middle of this cloud. One, looks like a 1-8. Looks like a 4-3. You see the one? Spy, snake, breakout, pullback, inverse head and shoulders, talking the walk. Now this time for a new lesson. Time for a lesson, time for a lesson. Inverse head and shoulders. NSHOULDRS. Okay, I'm going to set up for the SPY now. We got an inverse head and shoulders right here. I sold the SPX May 26th. Look for the highest count. Second highest, 502. I like that 500. Might buy 5 of them. At the 500, we got head and shoulders. There it is right there. We got to hold this. So 188. 188, the 500 strike. 188, the 500 strike. Coin. Coin's on fire. Not really. Kind of a dud the first hour. Yep, sure was, Josh. Where's my watch list? Where are they? ahead. What a red day. The Donald is up again. Got an alert on Netflix up. I said Netflix a little bit over. Well, not Netflix. And yeah, I did. I did say something about Netflix in the video. I think. Or we can just break that. No, I didn't put it in here. Damn it. Never mind. Thought I did. I'll be right back. Let's see what my girls got to say.
Met, and particularly spending not just in the AI space. Investors hate to hear about their spending in mixed reality, and anything in the metaverse really starts concerning Wall Street when it comes to Meta, the parent company of Facebook, WhatsApp, etc. So that's one of the headwinds that investors are kind of confronting today. And it also brings to mind an old adage, Oliver, and it's like, I refuse to check my retirement accounts today. Don't try to catch a falling knife.
Yeah. All right. When we look at the
Don't try to catch a falling knife. You're talking to the expert, baby.
So I think what we've seen recently has been, arguably a pretty consistent playbook for this counter trend decline. We obviously had the very strong, prolonged advance following the breath thrusts in November. We rallied close to 20+% from those lows.
What are you demoing about?
16% from the breath thrust area, right in line with what we've seen historically.
Be careful in this
And,
market.
You know, into the beginning of the year, there was a consolidation.
What's my
or a
resistance
rotation
on the
out of,
Donald?
you know, Mag 7 names, and you know, leadership has moved from, I'd say, early cyclicals, which is like technology, discretionary, etc., into the deeper cyclicals like energy, financial.
Okay, we got a symmetrical
industrials,
flag, and we
as,
did
you know,
break to the
economy is still
upside.
fairly
Okay,
strong.
mute you for a second. We got a pennant flag. Does anybody know what a pennant flag is? Pennant. It's kind of hard to describe, but I mean, I can go all the way down here and do a 1, 2, 3. That probably was the best place to do it. Pennant flag is when you have a flagpole, and then it creates a symmetrical flag after it. And they're bullish. They're better than a symmetrical flag. And we broke out to a double top. So we're going to pull up the 20-day 1 hour. And we did break the 20-day. So the next resistance, wow, you know, it's kind of hard to... Kind of hard to say there. The 9. That's it. We got to break the 9 on the weekly. Whoever asked. 39.50. Let me see. I still ain't went in there and peed yet. Yeah, I say. I don't think smart when I got to pee. 39.30, maybe. I gave the scenario about the dog races. I catch a dog getting ready to pee before he gets in the box. I'm going to put money on him. I win almost 4 out of 5 times. 39.30 is my resistance level, and that's stretching it. So I'm going to lower it down a little bit. That's stretching it. I'm going to remove. I'm using the weekly. Hope I ain't dying. 38.91. Resistance to break. And I'll show you what it is. It's the 9 EMA on the weekly. Now I can go, I think. Oh, we already hit 38.91. That probably, you're probably so, duh. You said the next resistance. Uh, that ain't no help. Then I'm going to go, okay, I'll make a bold statement. 41.87. 41.87. Next. Does that make sense? I have 40.25. Yoko has 40.25. I have, yeah, that's a pivot point inside of this channel. Watch the SPY here, Yoko says. What I say I had? 41. Okay, we got 40.25 and 41.87. Maybe. I have 39.81 for a hard resistance, or resistance to break. Oh, here's another mic. Inverse head and shoulders. Affirmative at 38.91. So that's going to be hard to break. If it breaks, we can move a lot higher. Mike probably already saw that. But that's it. That's what's got to break. And this is the Donald. Oh. What do you got to say, baby?
Boeing delays, but again, this is not something that weighed on the other airlines like Delta. United was one that was the S&P's best.
I can tell this chick sucked the bottle when she was a baby.
Adjusted losses per share were steeper than had been expected, 36 cents versus 34.
I finally figured it out, why she has that funny upper lip.
Quarter operating revenue around 6.3 billion, fueled by this strong travel demand. But last-minute leisure bookings didn't meet their expectations, and some of these newer markets did underperform. Southwest does expect to receive just about 20 new Boeing planes this year. That's less than half the number it had been expecting.
Don't you think people would have a little bit of fear of flying in these planes? Knowing that they all went woke. Now they're going broke.
Look out for now. Higher costs. The airline's planning to schedule some reductions after peak travel period subsides, shaving off some of the planned capacity expansions they had been anticipating. So they are taking steps to reduce costs at least. They're closing operations at 4 major airports in August.
You know what happens when we get low volume?
Bellingham in Washington, Syracuse, New York, and in Houston.
You know what happens when we get low volume? We get divergence. NVIDIA's green? Whoa!
Saw versus a United, Delta, American is that, well, the rest of the airline space is able to deal with this Boeing delay and production woes. It doesn't seem like Southwest is, given everything that had been weighing on them up until, of course, the Boeing fiasco.
Right, understood. All right, thank you for that, Jenny Horn. A good look there at Southwest today, under pressure. Let's get a look at the bigger picture here, because this is some significant selling that we are seeing here today, and get some insights in the news shaping the markets.
Can I have a little bit of gratification for calling the bubble? Will someone please put me up on a pedestal? No soup for me, come on!
2.4%, coupled with the consumer prices. That part is the inflationary part
You
of this.
people are dogs.
Up 3.4%. The prior was 1.8. Things are going in the wrong direction. It's showing the stickiness of the inflation. Is that why we're selling off? Why do you think we're selling off here?
Nicole, as you may recall, the last time I was on your show, I suggested that I believe that the market's gotten a little ahead of themselves in 2024.
No, everybody's coming out saying that.
Of a soft landing by the Federal Reserve. I believe then, and I still believe now, that we haven't reached that point just yet, and today's data only confirms that. We learned that GDP only grew, as you suggested, by 1.6% in the first quarter. The GDP now estimate, the most recent one from the Atlanta Fed, was looking at 2.7%, significantly slower than where we were at the end of last year. And then we see the PCE deflator coming a little hotter than expected. So all this tells me that we're not there just yet, and the Fed is really trying to thread the needle with respect to trying to slow the economy, not push us into recession, but also bring inflation back closer to their 2% target over time.
Right, understood. So what does this mean for rates? I mean, we've been in this higher for longer environment. There was even talk of a rate hike. You do have this slower economy, though. It's a very, they have to be careful with that because they want to tame inflation, but also, not stifle growth and cause a recession. Tell me a little bit about what you think the Fed is thinking here.
Yeah, absolutely.
The rates,
Yeah.
what's going to happen with rates?
Yeah, and there is a blueprint for what could go wrong here. Back in the mid-1970s, Arthur Burns started cutting interest rates prior to inflation coming down to 2%. That brought back double-digit inflation. Then Paul Volcker stepped in and actually raised short-term interest rates to 20%, stamped down inflation, but also brought on a recession.
Right.
I believe the Fed is still adamant that they do want to cut interest rates to prevent the whole forecasted economic slowdown from going into a recession. But the stickiness of this inflation is pushing that timeline back further and further. Could they still get 3 interest rate cuts in this year? I guess they could, but they're going to have to remain data dependent. We're certainly not going to see any talk of any interest rate activity prior to the end of July.
Okay, so, May's off the table, June's off the table,
off the
and
table.
then there's July and September and so on. We did get some earnings. We see Meta down, we see Southwest down. IBM and Caterpillar have been weighing on the Dow 30,
Yes.
for example. Some thoughts on earnings here?
Yeah, as it stands,
Dow Jones down
the
656
blended
points.
growth rate for the S&P 500 is only 0.5% for the first quarter. However, the technology sector, which has been leading the markets over the past 15 months,
I gotta go pee
expected to
again.
grow earnings by 20% year over year. Communication services, prior to Meta reporting, was
Yeah.
expected to also grow by 20%.
Right.
I don't think I have
really need
anything thought out to
technology come
eat.
through. I'm very interested in seeing what Microsoft reports later today, and also ultimately
Microsoft earnings.
in May.
I mean, are you surprised to see Meta down double digits
No.
today? Everybody had been saying that this one was the most impressive of the bunch and so on and so forth. There had been a lot of positive talk.
Yeah, it's hard for me to call them Meta. They're still Facebook to me. But the
Right.
stock was up 33% year to date prior to the earnings call. They
Yeah.
did beat on earnings. They did beat on revenues, but they forecasted lower revenue growth than the analysts were expecting. But I believe for the right reason. They're going to continue to invest in AI, building
Right.
out their AI infrastructure. And I think we're
Hello?
going to hear that from a lot of the earnings. A lot of CapEx spending as it relates to AI, specifically as it relates
Hello?
to infrastructure spending in the world of data centers.
When we talk about the Mag 7,
Hey.
in fact, you do have Microsoft as
Yes.
a name in that particular
Hello?
group that you like.
I do.
Why is that?
I ultimately think Microsoft is
Say what?
one of the winners, if not the biggest winner of the AI race. They were very early on to the AI
Brandon,
game with their strategic
why did you say the word
investment
pause in the
OpenAI,
speech the other day?
ChatGPT, They also
You're not supposed to say that
continue to
word.
invest to expand their offerings,
That
whether
means
it's
pause.
Autopilot,
You
whether
say
it's
the
Azure.
sentence,
We learned earlier last
and
week
then
that they are actually
let's make this clear. Here, I gotta
$2.9
turn this
billion
down.
to build their own data centers in Japan by the end of
Now, Brandon, when you gave your speech the other day, you mentioned the word pause. When we type the word pause in, that means you're supposed to pause, not say the word, you idiot.
share in the world's dedicated chip foundry. They also recently received a grant from the Biden administration as part of the Chips and Science Act because of their Arizona subsidiary. So there are more ways to play the IA race than just NVIDIA. Taiwan Semiconductor is an example, Microsoft is an example, Digital Realty in the data center space is an example, and how about Vertiv Holdings? We saw what they announced yesterday with respect to earnings, beating on revenues, beating on forward-looking revenue estimates. Very unique play in the AI world, Nicole, because they provide the electricity, the infrastructure,
So
and
on
cooling solutions to those all-important data
Netflix is the one that I did on the video.
Get ahead of itself, and on pullback days like today,
We had a double bottom. We had a snake breakout pullback. What happens next? You got a higher low. No, I thought I did this one too. Well, dadgummit. I left a couple of them out. Never mind. So we're breaking the 21. This could see 565, 563. Or even 560. If we break this resistance right here. We got to break this resistance right now. If we break this resistance, we'll go higher. 556.95. I know it's not the first time you've done it. Pause. Five 55695 resistance to break on Netflix. Am I correct? That's resistance to break. Oh shit. It's a nice snake breakout pullback. Boom. And then another one. That's a megaphone pattern, expansion pattern out of a snake. Mike. We got long snake breakout pullback. You know what? Would 137.83 be out of the range? That's a head and shoulders. Resistance off the 200 SMA. Think about that one. 137.83. We called the reversal too. That makes us real good. From the top. TSM topping around 138. What did I say? 137.83. Okay. We both agree. Now yesterday, I went against Mike's recommendation, and I left a little bit of money on the table. I made a very gross one. Snake breakout pullback, boom to the 200. You see the 200? And what else did I say? Head and shoulders, inverse head and shoulders on the bottom side. A shoulder line resistance. I'll be back. I gotta see what I can find to eat. Oh God, he looks like hell.
That obviously was not true. XLF, the ETF that tracks the financials, just made all-time forever highs at the end of March. Now, this is a stock that's been stuck sideways, and we've been
FITB I traded 20 years ago.
24, a breakout of that range targets 42. What I'm seeing a lot in the charts, not only here but in the S&P, the S&P has come back to that gap that we saw in February. That's what markets.
I mean, look at this. We had that big crash during Obama. And I predicted it. I mean, I predicted this thing. I said, man, not the only reason I predicted it, because his first speech, he gave a speech on how he was going to bankrupt Wall Street. One of his first speeches he ever gave, he says, people, don't go to Vegas if you can't afford it. I'm going, what kind of idiot would tell people this? You ain't my daddy. And then he gave a speech about how he's going to bankrupt Wall Street and share their wealth. And from then on, I said, that's it. I said, I'm shorting this market. And I didn't know nothing about it. And I shorted it. And it went from $13,000 to $6,500 every day, down 1,000, 5, 6, 8, 9 for about 5 months in a row. And FITB was at $1. I yelled out, I was in a room at the time. I created one of the first chat rooms. And I said, hey, FITB, man, let's check this out. We're at a double bottom on a tweezer, and it went down to $1. And I bought it, and I sold it at $5. That was one of my very first trades. There were a lot of companies. I mean, General Motors went down to 50 cents. Ford was at $1. Hog was at 9. I mean, there's just so many stocks that dropped thousands of percentage points. And we have the same problem now, and we have the same bunch in the White House. Times have changed. We're a lot more conservative in the market back then.
Value has been and continues to be moving higher, right? We're consolidating.
I mean, if we moved 60 points in a day, it was like, wow. What a great day. Now, if you move 300 points, it's just an average day.
Take a look at where we are relative to the 50, the 200. There are a lot of positives out there. And Alan, I am a talker. You know that. I love the sound of my own voice. In fact, my dad used to say that I was vaccinated with a phonograph needle.
Oh my God.
The
So
PE on
funny.
this
Oh my God, she said.
good value.
Were you on mic when you said that, honey?
Okay. Looking at Marathon, tell us a little bit about that one. Marathon Digital.
So Marathon Digital, so if you look at this sector, it's had a big pullback. It's 50% off its February 28th top. That was not so long ago, but it's still up 100% in the last year. So it is a momentum stock that's had a pause. Now, this is trading within a range between 15 and 30 here for 4 months. It's got a gap above at 22.5, which is also the midpoint of this sideways trading range. So this is more aggressive than I usually am. I'm only going with 2 months of time in these options just because of the fact that the implied volatility is higher and they don't, the distant options get too expensive. So I'm looking at that June 15 call. 15 again is that super support base. I'm looking at 15 call trading for about 475. It's 325 in the money. Again, that gap's at 32.5 up there. And if we get to that gap, that option's going to gain 100%. Now, also,
There's
since
June
I'm buying
15
less time
calls.
than usual using that stock substitution strategy, I can look at the May option, and the May option, which only has 1 month at time, so is trading about 375. So if the stock sat here and did nothing for the next month, I could pitch it out and I'd be down about $1. So it's a look
no June 15.
to look to see if we can bounce off this major
June 7,
major
June
support
20.
level and maintain this really strong trend that's seen a pause.
Yeah. Look, I mean, the first half of the 52 weeks is so steady, and then the last few months and
Earnings coming out next week.
Wild, all over the place, coming off some recent lows at least. So what are your thoughts, Ben, on Marathon?
Yeah, well, I hope we get a chance to dive a little bit deeper into what is a looky-loo trade, Alan. But let's start with the trend up here. Because short term, we are seeing some momentum to the upside. We're kind of in this wide range of balance right now, so Alan could get some further gains here. It's random until you look at the bigger picture, longer term chart, and then you're going to see we're trying to reverse a bit of a downtrend. We'll get into that in just a second. Let's start first and foremost, the last week or so price activity. Shares of MARA were trading down around 14, rallied all the way up to the $20 level. Now, this is a key area, so for it to stall out here, I think a bit of a disappointment, but well-defined trend up, bottom left, top right. No denying that, a 15-minute candle chart. Now, adding a little time on, you can see the significance of that spike as mentioned, and well, take a look here because you can see how we didn't really hold up there very long as we traded up to that $32 level. So back down to 20, and here, as I am noting here, look, 20 has been an area of resistance for a while prior to that breakout, which again took us back to levels we hadn't seen since March of 2022, but limited in terms of ability to stay at that upper level. So I wanted to just take a step back because this is where I'm talking about that randomness. We're in a wide range here. We could test the upper extreme, lower extreme, and hang out in the middle for a while, and it just doesn't really exhibit a lot of conviction one way or the other. But we're trying to get something going here on the bigger picture. This is going to be a key area again. If we revisit that 35 area, you can see it's an area where, well, we stalled out, but that trend lower that we had been seeing kind of also stalled lower as we got back above that 26 level. So, yeah, I mean, kind of wide range random, a bit of a mess down here, not necessarily something I like to
get involved in, support.
It could be that within that randomness, we get a further boost here.
It's at, Mara is at the 63 EMA on the 1 hour. We're about to break the 50. I almost jumped in this trade to scalp it, and it's up 5 cents. It's up 6 now. The $20 strike for May 3rd was at 63 when I started studying it. I was going to buy 20 contracts. That'd been $1,260. $20 times 6 cents is $20, so I'd had to buy more. Mary, we have some sellers waiting above 19. Yeah. Yeah, we'll wait. I'll be right back. I guess. Yeah, 70. Damn. Watch it go up. Take it to 19, right? Take it to a little under 19. Take it to the 21. There's your trend line. Yeah, right at 19. I can see it. Well, I appreciate everybody in the room. She said, "Oh my God."
1.25%. It's not catastrophic.
Right. Okay. Ben, why don't you take a look at the CC?
Body language right there. She's getting tired of him. I could see it. She had to run off to someone else.
Definitely time has been on the side of
CCJ.
the bulls here. Let's take a look here at the run-up we've seen. And just first and foremost, a very quick look at the hourly candle chart here, and then we'll get into the bigger picture. You can see strength, right? Simply put, run up to 52.64 and balance that's formed since. I like to look for acceptance after a big move up like this, and we're definitely seeing it. Again, an hourly candle chart where value has been forming around 48. We're going back over the last few weeks here. This run up occurred, if you remember, we were down in the end of March trading around this $42, $41 level, and again, all the way up to 56, a significant move higher, accepting this upper level. I think that's most important here. So let's add a little time on, right? And we can really start to look at that longer term trend here. As we do, you're going to see bottom left, top right. We're going all the way back to March, the pandemic, basically, 2020, 530 is where the stock was.
Pulled up this chart and to come up with one of my old lessons here. 5 tips of building an effective watch list. Number 1, keep it simple and keep it fresh. Number 2, start off big, then go small, building your watch list. Number 3, play your favorites. Play your favorites, stocks that you've won on. Don't play ones that you've lost on, unless you want to revenge it. Find what you want. Find what you want. Find something that suits you and your hobbies and your habits. Make it comfortable to you. If you're into swimwear, maybe apparel. If you're into cars, maybe you want to just have a watch list full of cars. Separate them out. Keep them separate. Find a sector. And the last, and one of the most important when it comes to being a stock trader, is stay in the now. Be in the know. Know what's going on. Are we in a bear market? Are we in a bull market? Do we feel bearish? Do we feel bullish? Do we know what irrational exuberance is? You get into a stock, first thing you got to do is read the news. Don't take a trade if you don't read the news. You're a fool. You got to read the news. You're wasting your time if you don't read the news. You got to be in the now. It's very important that you understand number 5, because that's the most important rule out of all 5 of them. Be in the now. And that's it.
Ameritrade is now part of Schwab. Bring
What? Harry Weinstein's rape conviction overturned in New York? God. You can't. Gotta be kidding me. Liberals get away with murder. Yeah, baby. If you give me a little bit, man, I'll make you a movie star. Spy hitting trend line from yesterday. Uh-oh. Spy calls 500 strike at 188. And the crowd doesn't know what to do. They are now at 237. 238. I'm up $100 a contract. Spy calls, scalping the 500 strike at one. No, I'm not. It's 188. I'm up $50 a contract. La 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 la. Do, 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 do. A 1, 2, 3? No. Hike. Yeah.
And get, the benefits of that spending. And it really has put an overhang on the entire group, on the whole Mag 7 group, because it's showing the AI arms race. It's not coming at a cheap price. What did you think about that level of spend, and how do you think this could roll over into the other names?
Yeah, I mean, listen, as far as Meta is concerned themselves, I mean, I'd say the one disappointing factor is they continue to spend enormously on the metaverse, right? I mean, they continue to lose, let's call it about $20 billion a year in terms of the run rate, 15 to 20 billion a year in terms of the metaverse. They could have offset some of the, potentially the higher expected AI spend by kind of cutting a little bit on the metaverse side of things, but that doesn't appear to be what they're doing here. So that was a bit of a disappointment, and I think on Meta's side of things, and I think potentially what is frustrating investors to an extent. As far as the trickle down effect across kind of the rest of maybe some of those cloud and digital ad type names, I think it's a little bit kind of overdone when we kind of think about it here. When you look at the cloud type names that are going to report tonight in terms of Microsoft and Alphabet, the difference with those names is the higher spend that they're going to do or they have been doing is actually going to be monetized right through higher revenue, because that's kind of GPUs that are getting installed into their ecosystem, and you're getting those enterprise customers that are actually kind of renting that space out and actually paying up for that those advanced GPUs. So there is a monetization, an instant monetization that you're going to see and hear about, from the likes of Microsoft and what have you, despite the fact that they're going to continue to step up on the spending side of things. But for Meta, it's more along the lines of being patient, which is what Zuckerberg is kind of
Spy at the VWAP.
Yeah, look, I mean, a lot of the folks I've been speaking with up to the Meta numbers thought Meta was most impressive, that they've been controlling costs, and so I think there was this element of surprise and sort of, scratching my head moment where you look at the outlook and say, well, what do you mean you're going to be spending this? And I don't think people realize
Spy at the VWAP.
your ratings on some of the other Mag 7s.
So our favorite name is.
It says it's
Microsoft,
finished.
Reporting after the close tonight. We do like the pullback here. I mean, it's now trading closer to about 26, 20.
We're squeezing right now.
On a calendar year 25 basis. So we do think the valuation makes sense.
I'm not going to get it yet.
Given the recurring revenue streams and what have you from.
It's time of the day where I got to kick back and not make mistakes.
Bullish tone in terms of AI there. We also do like,
like I did yesterday.
Alphabet as well as. Some of those other Mag 7 names that are thrown out there. So we remain, pretty bullish on kind of these names that would be buying kind of on the dips. I mean, clearly the sentiment is not there right now. But if you kind of look at the long-term trajectory of these names, I mean, clearly, we do think they're going to be winners in this kind of AI arms race out there. If anything, we would be more concerned about some of the smaller software plays out there that are going to have to compete with some of these more platform-based large mega cap names over time.
Yeah, I mean, I see the currency headwind. That was something. But I'll go ahead and talk about the rate headwind. How do you feel about the fact that 10-year yields right now are at 5-month highs? You're going to have this higher rate for longer environment. That generally pressures technology regardless. Are you worried about rates sort of holding back names like Meta and Microsoft?
So I do think the higher rates that we're seeing is to an extent pulling in some of these multiples. I mean, when you kind of look at the broader S&P 500 tech sector, let's call it about 4 weeks ago, it's trading close to about 30 times on a forward basis. Now it's trading closer to about 26, 27 times. So the multiples are coming in as they continue to execute on the top and the bottom line. So you're kind of seeing this digestion phase going on within tech. I'm not necessarily concerned about kind of the long-term trajectory for these higher yields on tech. If anything, it is a much different kind of tech environment than what we've seen in years past, which was more hardware-driven. This environment is more kind of software and kind of mega cap name driven, where you've kind of got those bellwether kind of balance sheets and free cash flow generations and more recurring revenue streams. So I'm a little less concerned. And again, the kind of the digestion and the pullback in valuations here probably warranted, to your point, given the rise in rates here.
Angela, it's great to see you. I'm glad you were able to come on today because it's such a big day. Meta and Microsoft, so really, truly appreciate that you made it happen. Thank you, Angela Zeno, CFRA
Great.
Research.
Thank you for having me.
Coming up next, the disruptors, and we're looking at ServiceNow after the quarterly report. The shares, in fact, are hitting 3-month lows in reaction. George Sillis will join us. He'll give us all the details and an example trade as well. Feel free to buy back.
Well, that's kind of neat. Notable downgrades. LI, DEC, and MMST. They must have got my memo.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for developing stories this morning. We bring in Diane King Hall with us, senior markets correspondent here on Schwab Network, taking a look at Microsoft, which reports today after the closing. Bel Angelo Zeno just was on with us a moment ago, and he said he liked Meta and he liked Microsoft too. Obviously, all these names are taking a hit, higher rates, and also what we heard from Meta. But some thoughts on Microsoft?
Yeah, look, Meta is certainly causing a downdraft in the tech sector, right? There's concerns about that CapEx spend, and is Microsoft going to deliver a similar story, right? Especially, and the other thing is Meta talked about AI, but was it enough, right? And we've talked about there are going to be winners and losers in this AI space. Microsoft is considered not just a winner, but the king. Can it maintain its pole position in terms of its development of AI? And investors are looking to hear more about the monetization story. So let's talk about expectations for Microsoft when it reports after the bell. It's expected to report adjusted EPS of $2.81 a share. That would be up from the same time a year ago. Period. A year ago for that quarter, it would have been $2.45 a share. Revenue is expected to top $60 billion. So those are the numbers that we're looking out for. Another thing, though, that we have to watch out for is kind of what the expectations are, because the bar has been increasingly raised for all of these tech sector companies, right? Especially as you talk about the Mag 7. Microsoft, they'll want to hear more about, again, the development of AI, monetization of AI. Now, it did gain some steam this week when you had the announcement of Coca-Cola doing a 5-year deal with Microsoft for its Azure cloud services. That's a $1.1 billion deal, and it's planning to use this AI technology. So that bodes well for Microsoft, but what else will it be doing in terms of the development of AI features, services, etc.? So that will be one to watch out for. Are they pushing this narrative forward, and are they pushing the monetization of AI forward?
And you know, he was saying that he likes it on the pullback here, because we're down about 4% today, and so you know, we're still in the thick of earnings season, and we're seeing the pressure here. So thank you so much, Diane King Hall. A good look there at Microsoft, which is due out after the bell today, folks. In the meantime, time for the disruptors, and George Sillis is with us, senior market correspondent here, and taking a look at ServiceNow, which right now is down 5.8% at 702. Some of your thoughts here. It's falling after its earnings. What do you think of these numbers?
Yeah, I mean, if you look at the numbers for ServiceNow, Nicole, which is actually one of the enterprise resource management companies that's a leader in, productivity tools and HR tools and automation of workflow productivity. I think overall, if you look at the numbers for the report, they were actually quite good on the trailing basis for the estimated quarter results. They came in around $3.41, which is actually higher, beating the estimates, which were about $3.13, higher by 44% year over year, and sales were higher, coming in at $2.6 billion, fractionally higher versus the $2.59, up 24% year over year. The other thing is they denoted subscription revenue, which was higher by 24%, and their free cash flow guidance was actually over 30% for the full year. But the thing about the quarter coming up is they slightly guided lower for sales as well as for the fiscal year. But if you look at the misses on the guidance, they were just fractional, but it was enough to send the stock down about 5%. And with that said, I think what this does is it puts off the prospective price movement off a little bit further out in the future. Because if you look at some of the analysts, for instance, UBS downgraded the stock in price to $875 from $900, whereas some of the other analysts are inching their targets like Piper Sandler to $830 from $750. Even Morgan Stanley has an $830 price target on this name. Based upon the fact that the company's been growing, its large customer count grew for customers that generate revenues for them over $5 million, double from last year. But I think the guidance was the reason that we're seeing a drift to the downside, and it's basically putting off the earnings estimates a little bit further out in the future.
All right, thank you for that. And an example trade has obviously been a winner over 1 year. I mean, it's up 55%, but we see this pullback today. Yesterday, it was sort of noted how it was the leader of the pack. Now what? How would you go about an example trade today?
Yeah, so there's a couple things. Obviously, the stock had been drifting lower with the market, but yesterday it failed to reclaim the 100-period moving average. This is before the earnings event, so it's gapping lower. So what I'm going to do is I'm going to use the 100-period moving average, which is right around the $750 area, as a area of resistance that the stock might go to, but I think it'll have a hard time, at least the next few weeks, to breach it. So we're basically going to place what's called a short call vertical. It's a bearish trade, but it also can allow us flexibility because the stock can also move higher up to that 750 area. So we're going to go out to May with about 22 days expiration. This is the monthly contract, and sell the 750 call, and then simultaneously buy the 760 call. So altogether, this would earn me about $2.50 a share, or $250 in credit per contract. So ideally speaking, the objective of the trade is obviously for the stock to stay below the short strike, which is 750. 750, 250 is your break even. And if the stock does breach the 760, that's where your max loss is, which is $7.50 a share. So I think the stock will probably do well over the next year. I think the analysts are right, but it may not necessarily move much higher in the next month or so, and that's why we placed this trade.
All right, George Silas, thank you for that. Great to see you. Appreciate it. Our disruptor every single day, and a look at ServiceNow here today. Coming up next, we're watching Chipotle after its quarterly report, another solid report for the company. You know, we've seen the people coming in. They don't seem to care as much about higher prices, at least for the moment. So can it continue to impress folks on Wall Street? We will see. We'll talk about this with our panel next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab.
I'm working for Schwab.
People understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tip.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We're taking a look at Chipotle after its quarterly report. The stock is managing to hold on to some great gains today. It's at 4.5% on the day where this could be the worst day of the year, right? The S&P and the Dow are lower. The Dow's down 600 points right now, but still, Chipotle wows investors with this solid report. Dan Aarons is with us, Managing Director, Portfolio Manager, Advisor Shares, and Nick Setien's with us, Managing Director, Restaurants Equity Research at Wedbush Securities. And you raised your price target to 3,200, up from 2,850. And I can see
what's this?
peek through and I see it.
Member joined Washboardjim.
Raised a little bit, you know.
3 weeks, 5 days, 1,957.
So everybody just feels a tiny bit.
I have an imposter.
About Chipotle, Nick. What made you feel better today and say, I'll raise my price?
Wow.
You know, it was really just the guidance commentary, the commentary on transactions, particularly. You know, April has accelerated again versus Q1. You know, and they delineated very, you know, believable drivers, right? So throughput, number of entrees per peak hour. You know, it's very much things that are within Chipotle's control as opposed to, you know, open to macro, you know, headwinds or tailwinds. So. To the extent that they can control their destiny, we're all incrementally more positive.
Yeah, it's really interesting. What do you think, Dan, when you saw this? I know you have this in the ETF. Tell me a little bit maybe about the backstory and what stood out to you today.
Always clean as Jim.
Well, Chipotle is one of our favorites. It's our second largest position in our restaurants ETF.
You need a sugar daddy.
Simple Eats. They came out with.
I'm sorry, I can't help you, ma'am.
Beating on all metrics. You know, when looking at restaurants, you have to be careful and make sure that those metrics just aren't based on inflation. And in this case, Chipotle had increased foot traffic, and that led to them being able to raise their full year outlook. They beat on earnings, on revenue per share, on operating.
We have an ascending triangle.
All across the board.
Red alert.
An
Red
important
alert.
thing to point out here, though, is we think that this fast casual segment is
An ascending triangle. One, two, three. If you can count to 3, you can trade with me. If you can count to 4, you might make more. And all you got to do is drop down to 4. But this is the sweet spot. This is where the home runs are hit. We could have one more chance down, but man, I think it'll be pushing it. Well, I'm in it. Here comes the reversal candle. Gravestone. Nope, hammer. Inverted hammer, but that's at the top, so that could be a downside. Be very careful with your profit here. We are at a bullish, this is bullish. It's called an ascending triangle. Let's spy.
Inflationary, no doubt, Dan.
I think these guys are from Chicago.
ETF that you have all these different kinds of restaurant names. Do you see any headwinds, or is it
No, I don't know.
tailwinds for a name like Chipotle? This is one you seem to like. and maybe expand it out to a couple of the other names that you watch and why?
Sure.
This guy here.
Yeah, the headwinds in this space are quite obvious. It's inflation and it's employment issues. So what one needs to look at is, again, the companies that have the tailwinds that you mentioned to overcome those well. And you overcome those things with quality product, very good management, and very importantly, technology. Again, seamless ordering, a good customer experience.
A keg of beer.
Technology and ordering can overcome a lot of the headwinds of inflation and employment issues. So we like companies like Chipotle.
TSM,
Chipotle
God.
right now is Wingstop.
Mike.
Kind of borders between fast food and fast casual, but again, good technology.
If it comes down, yes.
Another one that's a favorite is Kava. And
It wants to break, though.
Area, Domino's does an
You got higher highs,
job
higher
on
lows.
efficiency and their technology. And
Is anybody
that's what
still
kind
in
of
this
raises
trade?
those particular holdings up to the top of our restaurant.
Is anybody in the SPY right now? Magnificent, are you in it? I missed you so much. I came very close to you, Magnificent. I've often wanted to smell and sniff your hair. Yeah, this thing wants to break bad. I thought she was going to do it here. If we get a big pop on this, I'm out of it. We had a big sell here just a minute ago. Oh, it's on the spot, yeah. It says it's finished. A big red cell right here at the top. We had two goalposts. Okay, let's talk about this. Anybody heard about the goalpost? Yeah. Let me see if I can use a different time frame, see if it makes a difference. Oh, this is divergence, big time. This is divergence. Divergence. Yeah, this got positive divergence right now. The volume, as the volume sweeps down and the price action goes up, that's called divergence. And someone mentioned earlier in the room about the volume slowing down in a stock. That means you could have a possible squeeze if you catch the volume start to pick up. Again, the volume goes down and the price action goes up. That's called divergence and a squeeze. Oh my, I forgot my sandwich. Shit. Oh, made it in time. Whew. One thing I can't stand is a burnt grilled cheese sandwich. There she goes. We're at 258. Correct answer is yes. There's a little picture of divergence. My sandwich. The target's the 200 SMA. Who has a target? 501.95? I'm going to eat my sandwich, grilled cheese sandwich with chips and Amish potato salad, mustard, made from the Amish. You know that's got to be good. So Jimmy is almost up $100 a contract. Jimmy got in at the shoulder line of the Head and Shoulders. Jimmy wants to sell it at the 200. Mike, I'm going to play a country song.
But some strength there, holding up a portion of that tech sector. Nathan, the other report that we got out today was jobless claims, another thorn in the side of the...
This one goes out to Randy. Me alone.
Now you're sorry, you're lonesome and scared, and you say you'd be happy if you could just come back home. Well, here's a quarter, call someone who cares. Call someone who listens and might
Give a damn. Good affairs.
Don't you come around here handing me none of your line. Here's a quarter, call someone who cares.
Me on the way. Maybe unknown. It's a quarter for someone who cares. Might give a damn. Good affair. Oh, your mind. Quarter. Someone who cares. got that off my chest. It helps me so much.
Well, the earnings overwhelmed the economic data. And now the expectations are so high for these earnings, like Netflix, like Meta. We got Microsoft and Google after the bell today. It's just one of those situations where this is almost predictable, Tom. It's not that big of a surprise that the data turned up months ago and firmed up and started turning higher. Now we're just, earnings aren't able to overcome that.
259, I'm out.
Like I said, what would Meta be doing right now if they didn't have the spending numbers? The numbers they put up were pretty good.
Oh, EPS and revenue beat?
Yeah.
Sure.
Yeah. So what poisoned this was the look at spending and the hesitation it put in with spending. And then add some strong economic data, throw the macro on top, pretty big down day.
Yeah, and Nathan, that GDP report, and we mentioned the component within that, the inflation component within that, higher than expected at 3.7%. Does that cause some consternation going into this PCE data tomorrow that, hey, so we're going to see some revisions, it's going to be higher than expected, and that's maybe why you're seeing yields pop and the weakness in equities?
Yeah, and maybe a little bit of the sell-off we're potentially trying to price in that report tomorrow morning. And, I think the issue with yields is when you are creeping up into, space. If we knew, for example, right now, if investors knew that 4.71% or whatever today's high was on the 10-year is going to be the high point for 2024, that would help us set our expectations about risk reward and when we want to get in. When we're creeping up into fresh high territory, we haven't really found that point where those buyers are stepping in because the inflation story is intact in terms of what the expectations and the data are matching. So we're still in price discovery mode in the bond market as well. And so while that's going on,
there's a point to be made here. Everybody and their mother on December the 30th decided that we were going to have 6 rate cuts. That's the main story. Nothing else. They were wrong. That's why I called the bubble. Because they were wrong. And they're changing the narrative now. They could invoke some fear in the market. They could sell off more if they don't shut up.
24. So the expectation, as rates have moved higher, Kevin, first 3 months of the year was great, right? The S&P 500 up 10%, one of the best quarters ever, especially in the first quarter. When you look at that move, everybody was banking on the fact that the Fed is going to start cutting rates. Then those expectations go away, right? I think the expectations for the first...
You're saying the same I just said.
To December now.
That's the big story. That's funny. He's talking about this, and I brought up about the interest rates, and then he comes around and follows me up with it. That's the big story. Don't forget it. You were lied to.
Is the fact that, hey, maybe we won't grow into those.
I've never believed that Wall Street is an index to look into the future. Like it's 6 months ahead, they say. I don't believe none of that. Maybe in the old days, but not today. Not with the way the market runs now.
It's guidance, and they guided to a whole bunch of new spending.
That's right. We want facts.
Setting a new trend, spending on AI, the market didn't like it. Yeah. I don't know why, but they didn't.
They loved it. The market ran to extreme levels. Just because it pulls back, it's just overbought, my friend.
Into earnings, more earnings. Microsoft, can it right the ship that we're seeing today? Because stocks rallied about 33% over the last 12 months, but it's pulled back pretty sharply from all its all-time highs that we saw just over a month ago. We'll discuss that when we come back right here on Fast Market.
Okay, let's go over the watch list. It is now 12:16 Eastern Time. What is that? What is that? Man, I tell you what, I like this. I like this a lot. I could sit and listen to that music all day long. Man, this is cool what they're doing here. Post-market earnings. I mean, this is great. They don't do this.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere on
I love this.
for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Alphabet. Earnings after hours. Intel and Snap
For the #1 hitmaker.
and Roku.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Hey, hello.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No problem is the only front man you need.
Oh, I gotta take this girl. Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. It's time to discuss Microsoft ahead of earnings. The bar's still high. Stocks pulled back about $35 from those all-time highs that we saw just a month ago. Let's welcome in Diane King Hall, Senior Markets Correspondent, here to help us break this one down ahead of earnings because, maybe some people taking advantage of this downturn in Microsoft post-Meta earnings, Diane, but at the same time, the bar's still pretty high on this one.
It is. Microsoft's certainly getting a haircut in today's market action. One of the concerns is this question about AI and the monetization of it. I heard Kevin talking about this earlier with regard to Meta. So it's just kind of causing a downdraft across all these mega tech companies. Right now, Microsoft off just under 4%.
I'm very gratified to see this market pull back. But to listen to these people, it just... So I'm going to turn that off. Spy, let's do it. Blanket. Boom, baby. SPX. I'm in the money. I'm in the money. I'm in the money. Bring it to me. And the SPX, I'm having the best day in the world. He's holding on. Can you believe I'm holding on to these suckers? The old Jimmy would be out. We are now at 320, 500 strike from 188. Go away, little girl. SPX. Oh my gosh. I'm do. See what music does to me? It brings me a winner. Chicken dinner. Does anybody want to see a cool video? Me acting like Charlie Sheen. Randy. Randy. We broke the upper value of the standard deviation. Mike? SPX? I'm going to go ahead and take some profit here. This is beyond. Well, we can keep going on this SPX. I'll wait till this. I'm going to get out and take some off the table here. These are at 930 right now. I got two left at 375. Okay. I'm out. Dang gummit, they're 10:40 now. I did it again. All out of the SPX at 9:30 and it went to 10 something. TSM? Whoa. Damn. Great call, Mike. Very professional. I'm sorry I didn't take it with you. I should have. Snake breakout pullback. You see it? I already talked about it, so never mind. 3 white soldiers on the TSM. The 200 SMA, I got 137.83, Mike. Resistance to break. 137.80. No soup for me? Okay. I don't get no soup. How dare you? Do 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 do. Bullish trend on Netflix. SPY at 325. Anybody have a SPY number? I got 501.91, but I'm thinking about now. Bust through the overhead fan line. 502.50. I got 501.89. It's knifing. I'm out of the SPX. I'm glad of that. Where's support at? You got two of them. Strong one right here. And your first one right there at 527. I'm going to make me some tea. I'll be right back.
On that movement, they need to obviously defend the dollars per user, but I think it's going to.
These guys had a party or something last night.
Competition comes in, it's going to be good for the, good for the consumer. More and more competition comes in, you're going to have to pay less one way or the other.
Roku.
Either by fewer advertising.
Wow, Roku's down a lot.
Fewer ads that you have to watch, or fewer dollars that you have to pay for no ads. And so I think the consumer is going to win. My guess is that number, that dollar per user, is going to go down across the board, not just for
Look at Roku.
users. So it's really all about that hours streamed, is in my opinion, and they're doing well there. But we're starting to see cracks in the armor when it comes to the number one first mover. They're the complete leader, and they always will be. We're starting to see cracks in that narrative through happiness and web visits. And
wow,
like that.
I didn't even notice this drop on Roku.
Concerned, but definitely not ready to pull the trigger on a bearish play.
It's back when it's been what? I mean, this could be tempting. Netflix is pulling back to the 63. We've got the 9 crossed over the 21, which is bearish. So we're squeezing right now. Netflix. Any minute we'll know something. SPX. Got a bull flag on 1, 2, 3. Got a symmetrical flag. One, two, three. Easy as 1, 2, 3. You and me. Booyah. If you got 3, you can trade with me. 1 2 bits and a freebie. 1s 2 bits and a freebie, and I missed it. It just turned right on. I would have bought that right here. I was 2 minutes and 40 seconds too late. I'm gonna go get my tea going. I'll be right back. Roku. The boys are talking about Roku.
24 hours or so into expiration, so keep that in mind also. But 2 good looks at different ways to play upside movement with the calendar versus the diagonal. All right, let's take a quick break. When we come back, we're going to take a look at Google Parent Alphabet. The search giant stock is up nearly 50% over the last 12 months. They've got earnings after the close. This could be another key one for the tech sector. Fast Market's coming right back. Market here on the Schwab Network. We're talking more earnings, but before we get to discussion on Alphabet, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network. Benny, we got stocks off of session lows, making some inroads, but yields have come off of those 5-month highs, right?
Yeah, yields off the highs, stocks off lows here, Tom, but still in negative territory across the board in all 4 of the major indices and stubbornly elevated levels. If you're talking about yields, you've got the 2
Yeah, I did it.
topped out.
I already had mine set up.
You saw the 10-year up to 4.73. What really stood out to me, and I think most notable, is the fact that yields took out the highs from last week, yet the indices did not take out the lows from last week. So the S&Ps bottomed out last week, if you remember, at 49.53, today down to 49.90. So that's kind of the line in the sand there. That's the level I would watch, especially if yields continue higher. Big data point tomorrow. The Fed's most closely watched inflation measure, the core PCE.
There's a storm.
Yeah, we're going to be potentially
Thunder outside.
a volatile session tomorrow as well, whether we're talking about positive in reaction to news or further losses. Don't forget, we also have some big names that are going to be reporting on the close today as well, Tom. Could move markets.
Definitely, and I was on your future show with you, Ben, and we talked about if those 10-year yields got above 4.7%. A half an hour later, we were already there. Pressure in stocks. All right, great stuff. Thanks to Ben Lichtenstein. He's on the future show here on the network. But now let's bring in George Tillis, Senior Markets.
To me, Thinkorswim's got a little bit better because I used to always have difficulty Remember at the end of the power hour when it got real busy, I'd say, man, what's wrong with this thing? I can't. Seems like it's running smoother to me, but. Wow, SPX. There's a $300 bounce right there. I just wasn't watching it. Beautiful. Let's talk about this. The strategy. Okay. Hello? Yeah, Jim. The other day you were talking about a bull flag, and you said if it broke out and it pulled back and hit that top resistance channel, that could be a trade idea. Well, I took that trade today, Jim, on that flag you called out. We had that bull flag, she broke out, and then she came back and retouched that previous resistance. 1, 2, 3. If you can count to 3, you can trade with me, but if you can count to 4, you might make a little bit more. 1, 2, 3, breakout, pull back. And that was $300 from there to right there. So what was resistance now becomes support. And that's a bull flag. What was resistance now becomes support. So you saw it break out. Hey, Jim, heard you and Sammy talking about the bull flag the other day. And I'm going to go ahead and pay for that trip that you've been wanting to Mexico. You've made me so much money on these chart patterns, especially when I count to 4. I make a lot more. They're $400. Oh yeah, sing grace, how sweet the sound. Break out to the highest level. Break out.
All-time high for you to lose. There.
Yeah, and you have to have that assumption, not betting, an assumption that.
Booyah. No, I did not buy BTBT. I should have. Merit new high of the day. CLSK new high of the day. Washboardjim, did you buy BTBT call option? I guess you know the answer to that. I should have. You know, the first thing I mentioned this morning, that they were all down, right? Now look at them. Now look at them. They're all green. All but WT, and I added that one on here. And this one doesn't have any volume. So that's got to go. That's a pretty good bounce. God, now this I should have thought about this. I should have looked at the charts. That's a big mistake right here. Oh my. You can pick about anything on here. They're all the same pattern. Look at it. They're all the same. We've probably got about a few hundred people trading this stock the same way. Somebody's trading this big. Every one of them is the same kind of pattern. Every one of them. Same snake, breakout, pullback, boom. Oh, I'm gonna go make some water. I'm gonna get some water. I'll be right back.
Quarters of 1% here in real time in a pretty critical area. You see the Dow back over 38,000. The NASDAQ, while still weaker by nearly 1%, is also well off of its lows here intraday. We had a GDP print as well. That, of course, Jenny, weighed on kind of sentiment a little bit. It was a disappointing, it was like the worst thing you could see. It was disappointment on the actual GDP, but the inflation component of it was a little bit worse than expected, or a little bit hotter than expected. So we're hearing that word stagflation thrown around again. But look, it's one number, it's one reaction. You see a move higher in interest rates, you see a move lower in the market. With some stability intraday, I think today was a very important day. It includes this afternoon. We're going to talk about a bunch of these earnings, of course, Jenny, but Microsoft has saved the market before. It does feel like we're at a point where any more weakness could send this market into a bit of a tailspin.
And it feels like Meta has also crashed the market before. I mean, not crash is an aggressive word, but obviously some of the pressure we're seeing in Meta today not exactly aiding any sentiment around that GDP figure, as Alex just laid out. But as always on this show, we'll step away from the macro. We'll focus on the individual movers. A lot of earnings to get through today. We'll kick things off with upvote and downvote. We'll chart and trade those upvoted names. For FOMO today, we're discussing a name that still has yet to report. That's Snap. That's naturally lower on the session as a result of some of the weakness we're seeing bleed over from Meta platforms. Then we'll also be previewing Alphabet as well as Microsoft, of course, ahead of earnings today with an analyst from Jewel Financial. Last but not least, today we'll close out the show with, unfortunately, a name that's moving to the downside. That is Harley-Davidson, as they saw global shipments of their motorcycles remain soft. And who would have thought? I mean, I haven't seen even a motorcycle in what feels like years.
It's not motorcycle season yet, though, so maybe it'll come back in the summer. Who knows? Not really my thing, but maybe George Tillis will have some insights for us for under 30. Looking at Hog, of course, all-time great ticker, up there with Wolf in terms of great tickers. But let's do upvote, downvote, not endorsements, not recommendations, Jenny. Only naturally we start at kind of ground zero for volatility today, and that's, of course, Meta. To me, and I know we'll go through the numbers, but I'm going to set it up with not overcomplicating things. We talked about it going in. High bar, hard to meet. Kind of seems like that's the scenario here in the case of Meta.
Absolutely, because I mean, 27% growth as far as revenue is concerned. That beat expectations. Top line performance was at the high end of their previous guidance, so that was strong. Further, this actually marked an acceleration from the 25% year-over-year growth they reported in their fourth quarter of 23. So not only is revenue growing, but it's picking up velocity. I mean, that's huge. And such strong sales growth combined with the benefits of this increased focus on efficiency unsurprisingly did lead to operating margin expansion and more than doubling in their earnings per share price. So operating margin expanded from 25% a year ago to 38%. Earnings per share rose a whopping 114%. But none of this would illustrate why we're lower, obviously, because what matters today is that we're down 11%. Actually, we've eased off of the session lows here. And so what I do think is what was all in focus is the fact that, A, they're still losing significant money on their
Fisher tells employees that 4 automakers are in talks
some more tepid growth
to buy the struggling startup. Fisher, I don't know if that's a good idea. They can't get their own feet off the ground. They're trying to. Are you saying they're trying to buy Fisher? I can see that. FSRN. God. Oh, Fisker. Fisker. Never mind. No, is it the Fisker tells employees, talks to by struggling startup. That's the same guy. He's a nut. Now, this could be a starting of a trend too, which back in the old days, when we go into these cycles, every 4 years we'd have a recession. And when we'd pop out of a recession, there'd be a lot of startups and companies that would probably be going out of business. And when you started seeing other companies buy into them businesses, that was a good sign that the economy is starting to recover. But that was back then. We had recessions every 4 years. Now, it's just a free-for-all. Back in the... Oh, you're so funny. 502, 22 hit. Yoko. Boy, right to the penny. Gosh. YouTubers, you got any stocks you're stuck in, need help in, or whatnot? Spy 502, the big resistance zone. You are right, Parge. The room is calling it. You're welcome, mannequin. You understand? You understand how I'm taking these trades? Mannequin? They're called squeeze, right? I know you can count to 3. If you can count to 3, you can trade with me. I can stand on the highest podium calling the bubble good. I'll be right back. I'm gonna make me some tea.
But
WDC on the scanner, Western Digital.
Bullish. I've seen analyst revisions up
Earnings.
100% since just February. Earnings expected to rise 115% from a year ago. Revenue is also expected to improve about 20% year over year. So easier comps. I will say this is a different area of AI in the overall semiconductor world, but it's one that's been more in favor of late. Micron's chart also speaks to that.
No doubt. Micron's last earnings release sent the stock into a volatile upside swing that we really hadn't seen out of Micron in several years, if not decades. Looking at WDC, I promised I wasn't going to overcomplicate things, Jenny. I'm going to go back to what we said throughout every single one of these names. This has been an outperformer. The outperformers haven't done enough yet throughout this earnings season. Until that playbook is broken, it seems like that's trumping everything.
I completely agree, and I think right now it feels like the lowered expectations obviously mean outside stock moves, but these downward moves seem well outside of at least what the market has been expecting. So it's been an interesting price sort of story to follow post-earnings, but we'll be looking both at Intel as well as Western Digital coming up next. Of course, both have their results due out later today. Stick around, Next Gen Investing will be right back.
Dun, dun, dun. I'm liking this channel a lot. They've done this here is. I hope they keep this up.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage.
SPY at 362, the 500 strike. Mm-hmm.
Volume spikes too. heavy volume, at least 50% above the 50-day moving average of volume. So we can see that there was some conviction, especially this one right here. That was during a rather severe gap down. So there was some conviction behind this move here. Now we're finding ourselves stabilizing a bit near this area right here. You can see we had this gap up on earnings, and then the post-gap lows where I drew this green line, that's about where we found some stabilization here. So if you're expecting these things to stop on a dime exactly right on the money every time, you're probably going to be disappointed here. But we did, fill this small gap here, and now we're finding ourselves, with a little bit of a bounce today. So we'll see if it holds.
We will see if it holds. I mean, I guess hanging on to a 1.2% rally here. But as far as momentum as we go into this earnings event, what are you seeing?
Momentum was more geared toward the bears, obviously, for a while here. But the recent action was interesting to me because we had several rapid-fire crosses back and forth out of that oversold area, that threshold of 30. So we can see that now we've managed to break our way out of the oversold area. We are looking like we're also invalidating that kind of very modestly sloped trend line there as well. And it's happening at a similar time with price breaking out of this downward trend line here. So we've got two more bullish scenarios here. We're moving beyond this trend line, although we haven't really seen an upside breakout per se. It's kind of just meandering sideways so far. But it just kind of pushed beyond it yesterday. So we'll have to see if we get more of a upward movement from that situation there. But we're breaking down the trend line on the price and the RSI. So hopefully for the bulls that can translate into some kind of more sharp move to the upside.
Yeah, maybe just a move to the upside that holds, because it feels like anytime we see any strength in Intel, it's unable to hold on to its rally. But now, as far as some levels you're watching, support and resistance, walk us through what you're seeing.
Volume profile is always an interesting study to include on your charts because it reveals kind of important areas here. You can see we're right at our volume profile point of control, this thick red line here. That's the area of heaviest trading. So we can see now that this is a area of support that we need to work our way
Intel earnings tonight
to the upside or the downside here, and try to get some directionality going from this supportive area here. So the trend is down. RSI is bearish, although we're having a very slight breakout for both of them. Probably we're still more worried about the downside here. So the area right around where we are now, 3460, 3475, around that area, that would be where the bulls would want to hold. If we were to move lower, check out here. We had some low points there and there. Our light green line comes in near 3220, so that could be another area to keep your eye on if we move lower. To the upside, well, we've got our 21-day EMA here at 37.28. In fact, that's an obvious point to look for some resistance. Also, this area right here, we had a gap down, those post-gap highs near like 36.50 or so. That could be another area to watch. And eventually, though, we would want to retake our other moving averages and retake this area right here. This the post-gap highs near 41.65. That would be a helpful point to overcome for the bulls.
Yeah, and so I will say that looking at this chart compared to what we looked at with Meta yesterday, it's very clear to see the difference in expectations. So with that in mind, not overcomplicating things is our theme of the day. Walk us through an optimistic example.
And what's that old phrase, fool me once, shame on me, fool me twice, shame on you? We're going to use that. Of course, things can change at a split instant. Anything that had happened before can happen again. And of course can happen differently, can change almost immediately. When you're looking at this name, we're going to go back to what we said, which is that first immediate trend that we've noticed, which is low expectations, a chance to beat, high expectations in terms of reactions, likely and has been disappointing to the downside. So looking at a bullish trade, Rick talked about the risk to the downside, not discounting or saying anything against that, but we're controlling that through risk definition and strategy. So you can see break even in this case would be 34.50 on the 33.36 May 3rd expiration. So we got a little bit of time. $1.50 debit means 150 in risk, 150 in max possible profit. Get above 36, this can be max profit. Fall below 33, you're at max loss. But when you're looking at this strategy, you do have an extra week and also the market maker move of just over $2 would get us above 36 if it just performed to that expectation. So inside the market maker move in the event that it does have an upside reaction.
Yeah, and I would say, yeah, don't overcomplicate some of these big names, because I know there's a lot of frenzy right now around the earnings events today after the closing bell. But now, to look at another one that I think is actually underappreciated. I know we looked at this chart a little bit earlier, but it's really one of the best ones we've seen in the overall semiconductor and memory chip space.
Yeah, certainly a strong move. We're up about 117% off those lows, and we've enjoyed this nice upward trend line here in our blue dashed line here. We can also see now we've got a opposite situation kind of our last chart here, where we're crossing above our moving average and crossing above this downward sloping trend line here. We have been trending down since we hit those highs. We had a bit of a false breakout, which was quickly retreated back below our trend line boundary. But today it's looking like we're hanging on to some gains here.
Yeah, we are.
We are, oddly enough.
Okay, here we go. We're on the 9.
We've got this nice green candle to take a look at here. So our moving average, so at least if we can close where we are, around where we are now, they'll all be sloping positively. If we were to fall off again here, that might make our 21-day EMA reverse back to a downward slope here. But overall, you know, the trend is looking decent. A bit of a give back recently after those highs, but you know, nothing catastrophic.
So now when we look overall at momentum here, I have to imagine momentum looks a little bit more favorable than, say, Intel.
It does, but you know, we had a little bit of bearish divergence here. We kind of topped out around the same point in RSI, even though price was much higher here. Since then, we bounced around the overbought area, once again, kind of the opposite of our previous chart, that threshold of 70, but we couldn't hang on. We fell below, we dipped below the 50 midline for a little bit and then made our way back above it here. So we're in a situation now where, once again, the opposite. Price is breaking above a trend line, and we're pushing above the 50 midline here. So our moving average trend is more positive toward the bullish side, and our momentum is more geared toward the bulls as well here. So perhaps a better situation for the bullish traders in this name.
So this is the friendliest of the trends we've talked about in quite some time. So now, as far as the levels we're watching, support and resistance, what do you see?
Yeah, we've kind of got our two competing trend lines here. We've got our longer term uptrend, our shorter term downtrend here. We've got some kind of obvious volume nodes to consider as well here. So these could be other areas to look for support or resistance if we, depending on which direction we break in here. So the 21-day EMA, our yellow line, 68.84, that'll be a key point to hold as we head into the close. That would be a supportive mark that we want to stay above here. To the upside, right here, we've got our node near like 72. That could be a area to watch, because that's also the recent high that we established after we had our false breakout. It lines up with that red candle's upper wick, the top of that point. So 72, and then around 77. 76.92 was our high, so a break above 77 would be what the bulls would want to see. To the downside, we've got our blue trend line. If we break through that, we've got the post-gap lows that we had around 63, and we've also got our 63-day EMA lining up with another volume node here. So between like 63 to 64 would be supportive.
Yeah, and I have to say that I know that we're still slightly lower on the session, but we're sort of right now peaking at session highs. So easing as we go into this earnings event, which also makes things interesting. But we will leave it there. Great breakdown, as always, Rick Ducat, our chart master. So now when we trade this name again, not overcomplicating it, this name has outperformed, relatively speaking, this year. So walk us through the name bearish example trade.
Yeah, so going with that theme, but there was another part of that theme, which has been that the disappointments have been outsized. The market maker move would target somewhere around 64. Rick talked about those post-gap lows around 63. I looked at the 63 put calendar, selling the next Fridays and buying the following Friday. So again, giving a little bit more duration. 25-cent debit on this trade means $25 in risk, so kind of a smaller trade as well. Looking for a move towards 63. The nice thing about these strategies, Jenny, we talk about this all the time, very customizable. So one way to look at it, it's a bearish way to look at it, but of course the expirations could be adjusted, as well as the price of that strike to better reflect
an individual's outlook on any stock, not just Western Digital.
Yeah, and I think that that's well put. And of course, two different ways to look at names that have performed quite differently on a year-to-date basis. But that'll do it for our Chartmaster segment today. Coming up next, it's time for FOMO. We are looking at all things Snap ahead of their first quarter results due out today after the closing bell as well. We have a busy afternoon, obviously, here, but we'll be breaking down some of the earnings expectation, what the street is thinking on Snap, which is actually 1.5% higher here in real time.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole
SPX.
everything comes full circle.
SPX.
On Trading 360. Catch us right here at the New York.
Pull back to support SPX.
360. Only on
Rondé.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Liechtenstein. Come back and burn your house down.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time for FOMO. So joining us now to discuss Snap ahead of their earnings is Diane King-Hall, Senior Markets Correspondent for the network. So good afternoon, good morning. I went to say, Dan, wow, it's been a day already. But walk us through what the street is expecting ahead of Snap's earnings, which actually we're rallying now on the session.
Yeah, that's right. We've got a busy afternoon ahead of us. I mean, I know we're at the kind of beginning of the afternoon, but after the close, we've got a slew of earnings. We've got really just a parade of companies reporting in the tech sector. And we've talked about Microsoft, we've talked about Alphabet, Google, but don't forget about Snap. It reports after the close today. It is expected to report negative EPS, so it's expected to report a loss of 5 cents a share. Revenue is expected to top $1 billion. In terms of
we're at 810 now.
are ahead of its number. Snap is higher currently. It's up a little more than a percent on, well, actually it's up 2% now. So it's been rising a little bit, trading counter to the trends that we've been seeing in the tech market today. Year to date, Snap is up year to date. It is up, oh, actually, no, it's down year to date. Sorry, on a year over year basis, it is up. Down year to date, though, compared to others in the tech sector, is down 30% year to date. But on a year over year basis, it is up 11% from a year ago. Now, Snap is expected to show growth in terms of users on its base. It's expected to show about an increase of half an hour in terms of time spent on its platform. There's always the question about Snap. Is it a social media network? Is it a messaging app? It's kind of somewhere in the middle. Now, Snap is expected to be a beneficiary of what's coming, what's looming in terms of this TikTok divest or the ban situation. So there's an expectation that some of the ad dollars that are on TikTok, which of course TikTok's parent company is fighting what is expected to occur there, that some of those ad dollars will shift to Snap. I'm looking at a note from TD Cowen. They're expecting about $10 to $12 billion of U.S. ad spending to shift over to Snap from TikTok. So again, Snap is higher, currently ahead of its earnings today, expected to report negative EPS 5 cents a share. Revenue expected to top $1 billion.
You know, Diane, when I look at this stock, I mean, it seems like every single time the stakes are super high for this stock and the volatility is immense in both directions. No reason to.
Okay, here's my 3 white soldiers out at 9.
Highlighted. It's not necessarily a quarter that's
9:30.
expected to be a super strong one, but this is one of those names that's underperformed. It seems like the bar has been beaten down a little bit. I looked at analysts; most of them are kind of in the hold camp. Kind of makes sense. You're talking about an $11 stock now. You know, what is there, if anything, in terms of a positive from this? Because I think we kind of know the negative. They're just losing market share to some of the other bigger players.
Well, the big catalyst is, again, this TikTok story and what happens next with the...
Dang, $9.90. $10.
You know, within that conversation, Snap is expected to be a beneficiary of that because the government has pushed forward with those plans. Now, ByteDance says it will fight. It's planning to take it up in court, this decision by the government. The president has signed it, signed this bill, which was included in that massive aid package, this plan to ban TikTok. Right, and so
Head and Shoulders
expected to be the beneficiary of this ban. ByteDance is saying that this goes against the First Amendment free speech rights, so they're planning to fight this. They're saying that this is not constitutional. But again, there is a criticism about how much access does China have to the U.S., to U.S. consumers, to U.S. users. But of course, ByteDance wants to hold on to this because of not just the ad piece, but the e-commerce piece of the puzzle in terms of social media. I mean, some people sometimes liken now one part of TikTok to being kind of an online QVC, if you will. So, but it's really the ad spend that would be the piece that Snap would end up benefiting from with how this ban is proceeding.
Yeah, and I have to say that I'm pretty amazed that Meta's move was not dragging, or is not dragging, frankly, more on Snap's performance today. We're up now over 2%. I mean, that's amazing. And I think as far as the ad story for Meta, it was positive. I mean, as far as all the ad impressions I saw were up year over year. So you'd argue that the story should be strong, perhaps, for Snap, but they've been losing consistently to Meta and Alphabet and these various players. And I also just think, Diana, honestly, anecdotally, I don't believe this TikTok ban is going to happen. So, like, what does your business model look like if your momentum is just really riding on the fact that someone else disappears?
Yeah, I do think it is, actually. This is where I differ from you, Jenny. I know we've been around this horn before on if there's going to be a ban. There's been, multiple times this conversation has happened, but this has received bilateral support. So whether you're talking about the Democratic side or the Republican side, the majority has voted for this ban, and there's been concerns raised on both sides. It cuts across party lines about the concerns about the exposure to China. While the can has been kicked down the road in terms of when this would go into effect, because the expectation is that this will go into effect after the election. So sure, the timing, and yes, ByteDance plans to take this up in court, but I do think that a ban would happen if it doesn't move forward with divesting. So ByteDance,
Diane,
yeah.
and let's just assume it does happen. I think the naive thing is to assume that Snap's just instantly a beneficiary. Like, I assume all these creators already, if they don't, here's a PSA. Make an account on every social media if your job is to be on social media. It's easy. It's your exit plan. It protects you. So my thought is the successful creators are already on Snap. And if they're primarily making their money from TikTok, the closest comparison to TikTok is Instagram. So Instagram is where that traffic is going to shift, not Snap, in my opinion.
Yeah, I mean, look, Snap is expected to be, when you look at the ad spend, it would be a smaller beneficiary, especially when you compare that to a Meta, right? And you recall, once upon a time, Meta wanted to buy Snap, but it said, okay, fine, we can't buy you, we'll beat you. So to your point, Instagram is considered the heavyweight in terms of the follow-up to TikTok, right? Versus, say, a Snap. So yes, the beneficiary maybe a Meta, right, or one of its subsidiaries, or even, I don't know if Twitter X could compete. It's a different platform, but it does shift some of the ad spend, and so Snap could be a smaller beneficiary of that. I do think you make a great point, though, in terms of the expectations for Snap compared to, say, the bigger tech players. The bar is lower for Snap, and to be fair, to your point, it has missed its numbers in 6 quarters over the last 2 years, so we'll see if it even hits its numbers today.
Yeah, no kidding. And it's not exactly the earnings consistency player that we talk about. And I will say, I like the conviction in that TikTok will be banned. I just want to make it clear for the record, I'm not a TikTok fan. I just have so much. Oh, go ahead.
Yeah, sorry, go ahead.
I just have so much faith in this TikTok community. I don't know why I'm not even a part of it.
No, so I think, look, I am on the platform. I'm not, anti or for it, but I just think with both the momentum that's occurred recently and the fact that it's been bipartisan support, that's why I think. Now, look, of course, the plan is that if it were divested, right, if it finds a new buyer, it wouldn't be banned. So that is the, question mark. If it finds a buyer, then no, it won't be banned.
Yeah, that's a good point. I think that's a good way to sort of frame this whole situation that's happening. But we will leave it there. Great insight, as always, Dan King Hall, senior markets correspondent for the network. So now, when we look at trading this name, Alex, walk us through sort of how you think about Snap, because remember the day that Snap brought down the whole market. I'll never forget it.
Exactly.
I think that day is going to happen when you've already had the Meta earnings and you're going to get Alphabet earnings on the same day. The market might go down substantially in the next 24 hours, but I don't think it'll be because of Snap. It'll likely be because
it already has.
The Alphabet or somebody else.
Snap already has.
It was. And it no longer is ahead of those names. So now that it's coming out,
This is a very volatile stock.
Already after Meta, so we have a pretty good idea of what that picture looks
Snap.
like for some of the key players.
I mean, this is very volatile stock. Well, we've been down here for quite a while. We got a Head and Shoulders. Man, that would have been a good buy right there. That would have probably took that trade at $10. Yeah, I would have. I mean, I don't know, but this is what happened last earnings. We were at $18, $18.90, and it dropped all the way to 10 or 11. So I'm not going to try. Frick, SPX is at 1080, 1280. Oh God, I just left 1430. I just left $500 on the table. Oh, pilly crap. God. $15.30. I just left $900. Not 9, but 6. Make it 7. What the heck? 1,700 now. 1,750. So 700 times 2 is $1,400 in 1, 2, 3, 4, 5 minutes. 4 minutes. $1,400 in 4 minutes. Yummy, yummy. Could almost short it here. Something that popped up like that. The 50-30s. The 50-30 puts. At 3.60. I got the $50-30s are 330. $310. I'm in the puts at 310 here. This is a highly risky trade because I really don't have a confirmation. No. We're at 3. You're winning too much. Dadgummit. No. Well, I got that wrong. Maybe. I'll be right back. Yeah, I better get out of this. Yeah, just hold your horses. Well, that was wrong. Get out of here before it gets any worse. That's one heck of a run, man, from the bottom. You know what? Now look at this. It's still gonna hold these. So we had the falling wedge at open. We took the trade on number 4. 1, 2, 3, 4. And we broke out, hit the 63 and came back. We nailed the very bottom. That's 50 bucks ago, 50 some bucks ago. We nailed it. It's always about a pattern. If you can't take the beach trade with me, wait for those patterns to show up. Wait. You're so pissed? The hardest part I got figured out when to buy. Now I just got to learn when to really take the most advantage of these numbers this year. I mean, you get in at an average of 375 and you make it to 2,000. I mean, geez, you had 8 of them. Overhead resistance. I love buying these SPX. I mean, it's put more money on my plate than anything I've ever traded. And I hate to say it about Tesla because it's done me very well, but at first I was real scared to trade this because of the volatility and the money. You could lose it just like that. But the more I work on it, 2 years straight every day trading SPX and SPY. My main 2 go guys. Just spot out a pattern. That's all you got to do. Once you see a pattern, man, just take it from there. See, we could have done it like this. Okay, you see this pattern, the bull flag. I called this one out. We took it, run it up, pulled back, took it again, run it up. Now watch this. Do you see anything in here on this pullback? Double bottom. You got a double bottom and you got an inverse head and shoulders. More or less triple bottom. Yeah. Inverse head and shoulders. So it comes down and hits double bottom, breaks out of the inverse head and shoulders. There's your head, your left shoulder. Here's your head and shoulders to catch the trade to get out. God darn. The 50-30s went to 23.80. Golly. Amazing grace. Damn it. What do you should I get out of most of my TSM when it hits 138 contracts? Woo! Golly. I've got 137.83. I'd be 123. We got a 123. We got a 123. Mike, take profit. Unless you want to swing it. It's close to my resistance in a way, and it's close to yours. Smart move. Smart move. Oh my. The NDX would have been a good one today. Oh man, snake breakout pullback. Oh, the perfect setup. Snake breakout pullback. Cook.
It's back above the 5,000. Markets at 5,050. Up right now to 5,050, down 21 points. The Nasdaq is down 0.5%. The Dow is down 332 points, and the Russell off about 0.75%. As you take a look at oil and gold are both with green arrows today. 23.44 troy ounce for gold, 83.04 for oil. The dollar pulls back a bit, down 0.25%, and Bitcoin up 1.3%. 64,765. So for some of the big stories in the markets, Kevin Hinks is with us, senior equities contributor of Schwab Network, taking a look at that GDP print where we saw inflation and slower growth. Not great.
Yeah, a bit of a head fake when the number came out this morning, Nicole. We looked at first quarter GDP that came in at 1.6%. Market thought that might be okay, but when you dove into the numbers, it showed the inflationary pressures. I'll break them down for you. Personal income was higher. Disposable income was higher. And savings as a percentage of disposable income was lower, dropped from 4% to 3.6%. So more income, more disposable income, and less savings put pressure on the inflation metrics. Bonds lower, yields higher, Nicole.
Yeah, I mean, that was the whole idea, because the idea here is that you still have an inflation, sticky inflation print, and that the Fed's not going to be cutting anytime soon if inflation's going to be so hot. And so the market sees that and does this big shift and sells off in a big way on top of the meta, story. Right. So it was definitely tough. And we'll get that PCE print tomorrow. And this comes on the heels of 3 CPIs that showed higher inflation. So the Fed has basically, if you ask the people on Wall Street, no business cutting right now, which was the high hope and one of the things that sort of led to a rally in the first place. Okay. And you know all that.
She just said it again.
Yeah. Talk about IBM, please.
IBM.
She just said it. What caused the rally in the first place was the anticipation of 6 or 8 cuts. With this number of the GDP, it's out of the question. It's out of the question. What I'm trying to say, there would have been better ways to handle inflation than raising rates. He could have went straight to the government and told them, stop your frickin' spending. You spent $18 trillion in 3 years of printed money. Of money we don't have. Not counting unfunded liabilities. In 3 years. We demand it. We will riot. Let's start a protest.
Make of the markets, the VIX is sitting around 16 today. You heard some of the things that we've been watching closely. What are you watching for going forward?
Yeah, hi, good to be with you, Nicole.
See, on the total principle, this market should be tanking more instead of running up. I mean, not well, the way we have. I mean, we should have pulled back a long time ago. I said it was funny from December 30th. I said, nope, that ain't the reason.
Mario, so, any data that we get on the macro front that starts to call into question either one of those two paths, I think with stocks up here, you're going to see somewhat of an adjustment in the equity market. The last thing I'll mention is, of course, everyone's been talking about interest rates in the Fed. Everyone's been focused on inflation. We got a PCE report.
We got Intel earnings coming out.
There, it's the Fed's preferred measure. So there's a lot of things happening within the context of a market that has done quite well year to date before this correction.
I'm just looking at a headline that says stocks drop, tech tumbles. Is there an opportunity here, or are we concerned that tomorrow's PCE print comes in, shows inflation as well, and that the market just sells off ahead of the weekend? Of course, you always have geopolitics too. What, do you see today, a day like today, as a buying opportunity? People bought off the we are up off the lows today, so they bought at the bottom of this day.
Yeah, it's an important question, and I think the answer really just depends on your time frame, right? If you're a trader, you're going to make a different decision than if you're a long-term investor. If you're a long-term investor, we're long-term investors at Albion. We are more, likely to lean into market weakness than we are to sell market weakness, because we're just not playing that macro game of trying to time the market. Rather, we want to own good companies. We want to diversify.
You idiot! You're up way too high.
Paying for those assets. And then we kind of, act accordingly. So look, if you have a long-term perspective, there are companies that are on sale. Of course, that doesn't mean it can't go lower. We're 5 to 6% off of the recent highs across the NASDAQ, Dow, S&P. Small caps, I think, are down 7-8%. So this is an opportunity to buy stocks at lower prices, but that doesn't mean that this pullback can't turn into a correction. And then, of course, from there, you have to behave yourself and you have to think and act long-term. You don't want to buy here on the hopes that things are going to suddenly turn around and then they go lower and you make a bad decision. So again, you got to really ask yourself, what's my strategy? Am I a trader or an investor? If you're an investor, then I think you're looking at some more attractive pricing today.
Mm-hmm. You know, you have a high yield environment here that doesn't seem to be going anywhere too fast. Visa yesterday was a name with an up arrow after its quarterly report. What do you think about a name like Visa now? That's a name.
Oh, I gotta
like,
go get
right?
my towels.
Yeah, it is a name we like. We've owned Visa for about a decade, and we continue to like the business. You know, what they delivered was another strong quarter. Looking at volumes going up, you know, high single digits. Cross-border volumes look stronger than that. And of course, that's been a story post-pandemic, is people getting out, they're traveling, and they're spending money across border, and we're seeing that show up in kind of a mid-teens growth rate cross-border for Visa. But look, at the end of the day, Visa is two things. One, it's a story on the macro economy. As the economy continues to progress and advance, and incomes go up, and emerging markets come into the fold, and the consumer spends, Visa benefits as basically a duopoly with MasterCard in collecting a toll every time we swipe our cards or use our iPhone to pay for something. But also it's the digitization of spending as well that is more of the secular driving force for a name like Visa. That is more spending going towards cards, mobile pay, etc., and away from cash and checks. So that's a secular growth story that's been going on for, you know, a couple of decades, and we still think there's a fair amount of runway ahead globally for Visa to take share there. So we do like the name. It's not expensive, trading at a high 20s PE multiple, but has a steady mid-teens growth rate. So we do like Visa.
Right. And then I see you have a couple of the Mag 7 on here, Amazon and Apple. Are these picks? Do you think they can go up 10, 20%? What are we talking about here?
Yeah. So, you know, Amazon has been interesting. You know, they were obviously a big pandemic winner when we were all shut in 2020 and early 21, and we were doing all of our ordering, you know, over the e-commerce channel and not going out to brick and mortar. So we saw this big run up in the stock. And then we had about 2 years of sidelong consolidation because Amazon was plowing so much of their sales into investments to build out their infrastructure, build out their legit.
So people on YouTube, if you're wondering what platform I'm using, it's called TrendSpider. I like it if I was as a learning tool. It programs, like I have it set up right now, for chart patterns. You can come in here and pick any kind of chart pattern you'd like to trade. We have inverse head and shoulders. We get triangle, descending, symmetrical, falling wedge, or I can put rising wedge, which if I wanted to play a put. So let's say I want to put in Apple. Little snake right here, snake breakout pullback. We got a little snake with a symmetrical flag. See the flag? Boom. Not much in here. Look at how spotty that is. Let's go to the daily. There's a rising wedge on the daily. For Tesla. That's 2 minute. There's a falling wedge on Tesla. We had one breakout, then we had the J hook. Then we had another breakout. It has a heat map. Candlestick patterns. Go in here to candlestick patterns. We got that's the wrong one. 1, 2, 3. 3 black crows I got set in here. We got gapping down doji, gapping up doji, hanging man, harmony, inverted hammer, morning star, Then I got my indicators on here. Volume flow. And then this is the prices where it could pull back to. Now I've got my TTM squeeze. I got the MAC, I forgot what that was. The 21 EMA on the volume profile. And then I got my moving averages. I wonder why it's not expanding the list. I don't know what's going on there. And then you got scans set up, already prepared for you. A whole array of scans. That, let's see, I thought I saw a double bottom in here. Double bottom in force. So we got McDonald's. That's the daily. We're going to go to the 1 hour. You got a 1, 2, 3 set up. Now what was all that? Oh, I see. There they go. There's my indicators. It's got a harmonic, a bearish harmonic candle right here, pattern. Tells you that the next day might be a down day. Your big red spinning top. Then you got an inverted hammer here, telling you that you could see an upside. Each one of these represent an hour. Then you got the auto Fibonacci set up. Automatically just sets you up right on any time frame. Then you got all the time hours you can change. Then you got the tools all over here on the left. You got the 1, 2, 3 right here. Snake, breakout, pull back, boom on McDonald's. Okay, well, kind of a little summary. Morgan Stanley. So this scanner does not belong to you. You can play it, but Nope, didn't make your own copy. What would I call this? Oh, here's the old alligator. I used to trade this alligator pattern. We got UNH on it. So alligator. Get some of these study gems. Two black bronzing. So here's alligator pattern. Here's your snake. The jaws start to open up. And then they close. It's called the Williams. So what was I looking at? UNH. Oh yeah. That was a mistrade. Should have jumped on that. Is this thing already back to 500? Wow. That would have been a good one. Ikamucho Cloud. And I think on here I got you got the Wilders on here also. Alligator. Bollinger Bands crossing the 20 EMA. That should be the 20. Yeah, the white one's the 20. Every time it gets on the bottom of the Bollinger Bands, it's a buy signal. And then when the 20 crosses over the middle part of it, it's an extension. See the 20 crossing over the middle part? This is one, this is that. This is a moving average I used to use. The EMAs, the 8, the 13, and the 20. With a share. Oh. I'm going to keep this. I got an idea here. Yeah, hell yeah. I've been looking. Let's do this. I'm going to fix this chart up. So, I got yes, the Wilders. I can get rid of that, I think. Damn it. What did I do? Oh, it's the RSI. Not too bad. I'm going to add the 200, the 9. I'm going to add the 200 SMA. I got the 21. Oh, that's the EMA. So what I got? 63. And then the 200. If I'm going to put the VWAP on here, hold on. I don't need the 9. I don't need the 21. I don't need the 63. Just need the 200. Where's my moving averages? Oh, I just have the 200 on here. Okay. Now I need the VWAP. Shall I use the anchored? I'm going to try the anchored. No, I'll go with the regular. Huh. Yeah, I don't like that. I'll work on it later. Bingo. Oh, I'm supposed to go out to my car. It's got a neutral rating. go out to my car. It's thunderstorming all day today. Back to the 200 on the SPY. There's a nice setups this morning.
And Liechtenstein seems to be the contributor here. 90 minutes left in the trading day. I know you saw the before and after that GDP report, which showed sticky inflation, and how this market has gyrated throughout this day. Some of your thoughts as we're getting close to the closing bell.
Yeah, my thoughts are really just, as you pointed to, red arrow still across the board, well off the lows though. Also, I think we got down to, what was it, I'm looking 50.22 in the futures and rallied back basically right where we were when we saw the number this morning earlier today at 8:30 Eastern.
Liechtenstein.
50.70. And we have come off the lows here, but I did notice, Nicole, the other thing that stood out was the SPX down to 49.90 today, but still holding above the lows that we saw last week. So it felt like a big sell-off here, but it's still relatively contained. Let's dive into the chart so you can take a look at the levels I'm keeping an eye on, and I think that your viewers should as well. First and foremost, I wanted just to begin with some of the selling we've seen from the all-time high, 52.64 on the top left of your screen, that low I just mentioned, 49.53, and then also point out, here's the low that we've been unable to take that out. That was from last week, right? And still holding above that right now. So that's kind of the line in the sand in terms of determining, indicating here if there's still further weakness or if that negative sentiment has been lingering, and at this point it's still somewhat limited, which is interesting because we actually saw a new high in rates. They took out the high that we saw last week in the 10-year and the 2-year back about 5%. So to see stocks holding on pretty well, I think that's a reflection of what we've seen in terms of the longer term, right? Investors' ability to kind of shrug off the negative, focus on the positive, and this comes even in the face of disappointing earnings, right? Well, it wasn't even the earnings now that I think of it from Meta. It was more of that outlook, right? Spending outlook on AI and some of the disappointment in terms of guidance. But here you can see again that move lower that we've looked at from the all-time highs, 52.64, to the lows we saw recently below 5,000, kind of hanging in there just above those lows from last week. But you can also see this longer-term trend to the upside. So throughout this, we had been kind of questioning sustainability. Now we're starting to see, again, a little bit more sideways, something a little bit more overlapping and rotational, a little bit more random relative to that high conviction trade we saw into those all-time highs. Something to watch here, that's for sure, especially with yields spiking as they have been.
Right, absolutely. We saw the 10-year at the highest in 5 months, basically. And as we wait for the Bank of Japan rate decisions, we think about a relatively strong dollar, and there was excitement maybe with the Bank of Japan moves that maybe the yen would be a star and in big demand, which it has not been. Tell me a little bit about your thoughts on currencies today, right now.
Yeah, I mean, with the spike in yields, you expect to see the dollar higher as well, right? It's actually lower here today, which is interesting. So I think this is a big part of what we should be watching, especially over the next 24 hours. Let's take a look at the greenback.
I'll be right back.
We've recently got above 106. It's pulled back a little bit some, but you can also see how it's relatively contained within the range that we've been in for the most part of the last year. We were down as low as 99 up to 107 in the fall of last year, and then here we've just kind of been, again, speak of random and limited in terms of conviction. Yeah, working your way towards the upper extreme, but still have yet to break out, right? But if we do break out, it'll be an indication that the Fed's getting a bit more hawkish, that inflation's a bit more of a concern, and that yields are on the rise here. Or it could just be an indication that, well, the yen's continuing to sell off, right? You mentioned the BOJ. What if they were to disappoint tonight? What if they were to come in and not really provide that support that we've been waiting to see? Intervention's been this word that's been kind of been floated around for a while, but just taking a look at the price activity over the last couple of weeks here, we're going back to when we were up around 6,700. This has been one of the more well-defined trends in futures markets right now. It's still well-defined, prevalent, and no rejection of. Let's just take a look, because this is just the price activity going back to, we'll call it beginning of April, end of March, but here's another chart. This adds quite a bit more time on. And Nicole, the more time you add on, the longer this pattern just sort of plays out here. It's easily identifiable, top left, bottom right. Wait to see again if the BOJ does something, step up, whether it's rhetoric or some sort of actual initiative actions to try and firm up the yen. But as of right now, this has been, again, on a slide. Look at this. We're talking since the beginning of April, it looks like down, I'm sorry, I meant to say up only 3 days, and it looks like up, well, since we've been coming off those spike highs that we saw middle of March, up, I would say, it looks like 6 only. So, again, one of the more well-defined trends to the downside, something to watch here with the BOJ decision tonight.
Ben Lichtenstein, thank you. So as we've seen the market selling off, you know what's been happening? Investopedia's anxiety index has been spiking, and there's so much more. Joining me right now, Caleb Silver, Editor-in-Chief at Investopedia. Thank you for being here. Before we get to the anxiety index, there was talk that the market was oversold and maybe, it was time to get back in. And Monday, Tuesday seemed so good, briefly. What are you thinking here? I know you watch a lot of the different movers and averages. What are you learning?
Yeah, maybe it was oversold, but just think about this. The average drawdown in an election year for the stock market's 13%. We got to like 5-6%. We're there now. Did we just potentially find that support that Ben was pointing to? We'll see 60% of the S&P 500 index members making new lows. Nicole, you were here 5-6 weeks ago. They were all making relatively new highs. That's the highest number since March of 2023 of stocks making new lows. That was the week of the Silicon Valley Bank failure.
Right.
We have the S&P 500 below its 50-day moving average for all the chartists out there. That's a pretty important number when you look at the momentum and how fast it shifted. You talked about the 10-year, that 10-year north of 4.5%. That causes all kinds of mayhem. And this is also the first time that's happened since last November. It's the longest uptrend, 162 days, Nicole, since we've had the S&P below its 50-day moving average. We're there right now.
I guess, it can't stay. All things, I guess, have to come to a pause. Maybe not to an end, but to a pause. I mean, really, when you talk about the pullback in an election year, traditionally, the election year, this type of election year would be a winning year, particularly with the incumbent. People are somehow buying in on the dips. I mean, today would be an example, right? The S&P was down. I'm sorry, I'll use the Dow because I know the Dow was down over 700 points. And, they bought it off the bottom.
Sure, absolutely. When you look at the stocks that investors, especially individual investors, are buying, they're buying their old favorites on the dips. I was looking at the Vandal Research tracker of the most popular stocks. AMD, that had fallen some 40%. Individual investors were back to buying it if they were buying at all. NVIDIA, obviously, once a darling, fallen now 10-15%, buying that on the dip as well. Tesla, that's had a terrible year, down 40-odd percent. Intel and Apple, 3 of those, Nicole, are chip stocks. So investors, individual investors, want to believe there'll be a rebound in the chip sector because it has sold off so much right now. 3 out of the top 5 stocks they are buying, when they're buying, are chip stocks. But retail inflows into individual stocks, lowest all year.
That's why you keep saying when they're buying.
When they're buying.
Because you have to put in that caveat, because they're just not as excited. And the truth is, I think the retail investors sort of come and go. When we have the meme stocks and GameStop was on the cover of everything, and people were like, oh, I'm missing out, you know, and then they jump in, and then they realize, oh, trading's not that easy. And then they start
Not that easy. They don't always
Say
go
what?
to the right.
Right, and so the retail
Hey.
investors, but we need the retail investors, right?
Man, don't be bashing us retail investors. Tell them to come to Washboardjim. He'll teach them how to do it, and they won't run off. That's true. Retail investors don't get right into this game without a big enough education, without a strategy. They just go follow somebody, or, you know, I know a guy right now. He got him a room. He's popular. He got in some trouble. Now he got his own room, and he's making 20 grand on people that want to listen to him talk for $100 a month. I don't charge. I can say the same shit he says. I could, but I don't. I don't need to. I got plenty of money.
Like in the 10-year. When that 10-year hit 4.5%, all things got unraveled, right? That's when the sell-offs really began in earnest. 10-year over 4.5%, stock market down 5%. It is the seesaw in full effect.
And, you know, people get excited, right? And then we talk about euphoria and greed. And, you know, when sometimes the smart money gets out, when everybody gets overly excited, the smart money's already getting out, right? So it's interesting because you have the fear and greed index, but also the AAII sentiment. And they sort of are telling different stories, aren't they?
Yeah, fear and greed index is at fear. It was at greed last year. You look at the AI sentiment survey, it moves a little bit slower. It's only about 33% bullish, so 67%, two-thirds are either neutral or bearish right now. But that is the most bearish it has been in 12 months. Our own sentiment survey that we do every 2 months, it was the highest it's been in 12 months up until about 2 weeks ago, and that sentiment changed a little bit. The notion that rates are going to be higher until whenever, inflation could be at this 3.5% until whenever, and a high treasury yield, that's keeping people away from markets. There's alternatives, and it also doesn't feel like maybe we've seen the worst of it.
So actually, right now, they are in sync, because you said the CNN Fear and Greed Index had been agreed, but now it is swinging to fear, which would go with the bearish sentiment that we're seeing, right?
But usually these things move a lot slower. It all changed on a dime. That dime was the spike in treasury yields and this notion that Fed may not even cut rates at all this year.
And then I love how you always just bring us some names to watch, and sometimes, you know, last year's losers or this year's winners. And so what are some of the big losers right now?
I love to look at stocks making either 52-week highs or 52-week lows, especially in periods of market volatility.
I do too.
It tells you something. Let me give you 5 names here. Bristol-Myers Squibb, Ava's Budget Group, Caesars Entertainment, Vail Resorts, and Peloton. 4 out of those 5 very discretionary. That kind of speaks to exactly what we read in the GDP report, that discretionary spend, the services spend getting a little exhausted here right now, but even, and that list of 52-week lows that I didn't include, a bunch of other healthcare companies, which is fascinating because typically folks are a little defensive when you get through times of volatility like this. Big healthcare selling off right now, along with discretionary.
Yeah, and usually that would be maybe a little bit of a safe haven, but the other ones are when you want to spend a Peloton, Vail, Caesars, renting a car.
That's all extra money.
Hertz is at a new low too. Vail, you know, some of these places didn't get snow either, but you need to spend to keep these places alive. Right now, 52-week lows on those names. Thank you for all of this and the perspective that Investopedia brings us. Caleb Silver, editor-in-chief of Investopedia. Thank you. Still ahead, let's talk about some of these automakers watching Ford and GM. Those earnings. We'll be right back.
Now we are outside.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. the relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that position.
You only got that position because of me, and then you divorced me. After we took that plane flight, I set you up with everything. Got you the job. Now you make $250,000 a year, and once you got that job, you left me. I'm heartbroken. Now you pop up on this TV screen every now and then, remind of how much I loved you. You talk about turbulence. Our marriage was a turbulence ride, up and down. And then you fell for the boss. That really, that broke the camel's back.
And sharpen your skills with immersive online education.
The heck? I'm losing my mind.
Adoption curve now to get consumers in there. And then we've seen so much price cuts on the EV market, which is great for consumers in the market now, but for anyone who recently purchased an EV can really kind of impact the residual values of those EVs. And so I think all this kind of continuing disruption in the EV space, it's going to make it a little bit more challenging to get that adoption curve.
Oh,
up
shut
in the
up.
midterm. But as prices come down, I think we'll start to see a lot more adoption of EVs for consumers. I still think
Exactly.
that's kind of the long.
You get the point now? That's why Elon doesn't care about margin. I want you to understand something, Four Eyes. Elon doesn't care about margin. He wants to put the cars in people's hands. He's more or less going to give them the cars. And it's shocking the whole world. And you can't live with it. $25,000 for an EV car? I'll go out and buy one tomorrow.
Quarter, I think, is that they're going to stick to what
I ain't paying no $80,000, $90,000 for one.
a year of losses to.
It's like the computer. It's like the microwave. It's like the flat screen TV. It's like Nintendo. It's like these SpaceX glass things. They all start at very high prices and they eventually end up lower. But I've never heard anybody complain before about margins. Now, all of a sudden, it's a big deal. I mean, a real big deal. And I've never heard, 15 years went by, nobody talked about margins. All of a sudden become like the number one thing. It's all right. They'll understand one day. I think he's kind of catching on now. Oh, well, if they lower the price, maybe more people will be able to afford them.
Now that we're looking at is vehicle affordability. The price
There he goes.
of vehicles has gotten so high, and we're seeing a lot more interest in kind of lower priced new vehicles out there, and they aren't very available at this point. And so at this point, I think it's going to be a question of are automakers going to be able to pivot and actually make some more affordable vehicles out there for
Don't you think you need a bigger head of glasses there, buddy?
afford at attractive monthly payments.
Yeah, and I'll tell you, Elon Musk was talking about the fact that people don't have more than $400 for a car payment and has been touting the idea that there is a cheaper Tesla coming out. Final thoughts, William?
Yeah, I think, people seeking exposure to the auto industry should have Ford, they should have GM, they should have Stellantis. Those guys are going to be here to stay. But I do think in the long term, Tesla's going to lap them. They're finding ways to innovate faster. They're building cars cheaper. And I foresee the future EV marketplace of GM and Ford trucks coming off the line with Tesla batteries under the hood. I mean, we got to just realize that Ford's going to be Ford. They're going to be who they've been for 100 years. And we should maybe bifurcate these things and invest in EV directly with Tesla and be proud to own, the commercial side of the business through the Ford and the Econo lines and the F-150s that you see driving down every construction site in America.
All right, thank you so much. It's great to see you both. Kevin Roberts of Car Gurus and Will McDonough of CEO of Corestone Capital. Thank you. Good to see you both. That's going to do it for us here on the watch list. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store 24/7. SchwabNetwork.com. Keep it right here. Market on Close with Oliver Rennick is next.
client won't care.
Where's all my charts? Damn, I wish I'd have watched this today. I had the support level. I had the ABVC on watch. I charted it up, and I wanted to, man, I didn't turn that on this morning. I jumped in that trade. Run it up to at least around here, 163. ABVZ. I like the stock. It's a real low float. I think I mentioned it before in here. Oh, look at that. I wasn't watching again. Look at this. This is pretty. I would have took that trade in a heartbeat. The SPX. This is very interesting. Look at this. Let me see how I can talk about it. So we had the breakout this morning. We called it out. Head and shoulders, or that other 1, 2, 3, or however I called it. I think it was a wedge. And it broke that, and then they had this big drop on the 200. I gotta get my shoes off here, itching. So you got a head and shoulders. Let me take a shoe off. I'll get more into it. I can't trade with my shoes on. I can't talk with my shoes on. I can't fight with my shoes on. I can't take a bath with my shoes on. So we created a head and shoulders, and we dipped back down to that support, and I got in that trade and sold it and run up, and I forgot about it, and just now looked at it, and I'm shaking my head. Right off that 200 SMA on the 1 minute. That would have been a great scalp. All you got to really have is the 200. I can make it real easy for you. Just sit around all day and look for the 200 and wait for something to touch it. And about any time frame. That is beautiful. That is really nice. I wish I could have saw that. Oh well. Netflix. Yeah, they're coming in.
always different pressures, either positive or negative, on stocks. And when all the macro numbers blow up, like yields did today,
Damn it.
that's not going to help stocks. But there was also a micro story involved. That's why NVIDIA was able to recover, Meta wasn't.
Yeah, good point. All right, so macro driving the bus now, more so, at least so far in earnings, has been a more powerful force. The problem with the buying of the dips in NVIDIA and chips to save us is NVIDIA's still only at 830. So we didn't even reclaim the lost support line at 850. SMCI, 790, Jenny? I mean, like, this ain't the heyday of a couple months ago by any means.
Well, okay, guy, you're off $5.
Pullback has been healthy. I think
Support line's at 845.
I actually think that the encouraging thing with NVIDIA rallying today is the market's able to separate out Meta's earnings breakdown, because I think typically if you saw Meta down 11% as it was earlier today, you'd see that more spill over the rest of the market. It's kind of amazing actually how resilient we are, considering the crown jewel of Meta has fallen. So I think the fact that even NVIDIA is able to still post a positive day expected, I mean, that's not too bad. And mind you, its four customers are, the largest four customers are Meta, Microsoft, Amazon, and Alphabet. So we could still see some volatility in NVIDIA if obviously these results do paint that picture.
And to the point about how strong Meta was, I think the recent trend was even stronger in Alphabet. So to me, if that one breaks, because I mean, Alphabet was basically making higher highs and higher lows all the way up through yesterday. I mean, we were right below the high for Alphabet. So if Alphabet breaks, that to me would be the recent crown jewel totally falling apart. But Microsoft usually doesn't disappoint, in particular among these companies, probably the most stable. And think about the times Microsoft has bailed us out of rough situations the last 4 years, Kev.
Careful on PCs in Microsoft, but they're going to be injecting AI into just about every aspect of their business.
And a real product with Copilot.
Yes, but here's the problem. Microsoft was just a 37 PE. It's now a 35 PE. That is still historically rich. And I'll give, and for your viewers, a quick history lesson. Go back and look at streaming. How it was going to change everything having to do with it. And all the valuations, though. Look at Roku.
Yeah, when you arrive at the destination. Yeah. When you arrive at the destination of growth, oftentimes stock then loses valuation. Yeah.
But so Alphabet looks cheap compared to Microsoft because it's like 27 times. But I was looking at, well, you should, I guess for that reason it's attractive in earnings. But Meta also wasn't super overvalued in earnings either. Yeah. I was looking at the same thing, Kevin, because 37 PE, I mean, it's more expensive than most of its industry, but Alphabet's cheaper. But apparently the market doesn't care because Meta is like trading at 27 times.
We certainly have entertained frothier valuations within the last couple of years, but when bonds are ripping like this,
there's a risk in Google of ad-free search.
Yeah.
With AI. Remember that.
100%.
That's a threat.
Bigger in a second. All right, thanks. Good setup, Jenny Horn, Kevin Hanks. Appreciate it. Let's talk some more about that macro headwind that seems to be preventing those lofty valuations from staying intact. Arnim Holzer joins us, global macro strategist at Easterly EAB Risk Solutions. Arnim, welcome back to the Schwab Network. So are bonds indeed just the easiest way to explain why suddenly we're losing interest in some of these hot themes?
Great to be here, Oliver. First of all, I think bonds are a part of it, but really more to the point is the yield environment and what we see as a secular change in terms of the way inflation is behaving and around productivity expectations. We don't think this is a cyclical environment that can be solved by just looking at the past. And I think your conversation about Meta is a great case in point. Investors now getting paid between 4.5 and 5.5 in different short-term investments are really, really picky and upset when they think capital discipline is not going in the way that they'd like to see it go.
Okay, so the companies then that try and stretch the tolerance of the market with spending, even to acquire growth, have to get repriced. I mean, do you think it was harsh for Meta, or do you think that should just be the standard we should expect for all these companies this quarter?
Well, to your point, it may have been harsh, but if you look at the market follow-through, I actually think the market handled it quite well. Very well. But ultimately, I think the issue of a secular environment versus a cyclical environment, which is what your contributor was talking about before, is really important to understand. And we think investors are still looking at this as a cyclical, trying to figure out whether we're mid-cycle, you know, within the old kind of ranges that we've seen over the last 20 or 30 years. we have a belief that part of the reason why the Fed is confused and why investors have been so quixotic has been because they don't understand that there may actually be some changes given geopolitical, given the changes to supply chains, given the changes to the inflation expectations, which I think are becoming more entrenched, even though the rate has come down, that creates a different secular environment and ranges for correlation and ranges for volatility and ranges for the capital structure that investors are willing to accept.
So that sounds like a view of structural inflation lingering with us, which is the higher for longer back right in front of us. Everybody seemed to agree it was higher for longer, and then they changed their mind the last 6 months, decided they wanted 6 cuts. So now we've kind of come full circle. What types of openings does that create for bonds, Arnhem? Just firstly to start there, because as you mentioned, people are looking at 5% again going, hey, that's juicy, but it's not juicy enough apparently because we're moving fast right now.
It really keeps you, I think, at the short end of the curve. We would be very cautious about moving back towards, the 60-40 portfolio, the traditional asset allocation models that really overweight bonds because rates are up. We're concerned that the general level of volatility in fixed income is still elevated above what it was pre-pandemic. And we think the general level of correlation is too high. Now, granted, in the last month it's gone down a bit, but you've seen positive correlations between the mid part of the curve, the belly of the curve, and the longer part of the curve with stocks, which you generally don't see. So those things leave you in a much more problematic environment for diversification. I also think for corporate structure, if you're the CFO of a firm, a treasurer of a firm, looking at how am I going to address the need, my investors' needs, you have to think very differently in this environment. And that process is a transition that will not be easily solved for investors. Witness what happened with Meta yesterday. I'm not sure that they were wrong in making the investment. It's going to be an expensive task to really become a leader in AI and build that out across their products. But the truth is investors don't necessarily buy into that, particularly the boomers, who finally, after 20 years, are no longer being penalized as savers. And so this is going to be, I think, a very different environment.
Absolutely. A really good point as we kind of look for explanations. Why can't we achieve the frothy COVID levels in valuations, right? Well, I think a lot of folks kind of looked at that chart and they go, oh, PEs aren't as high as they were in COVID. Well, yeah, the bond situation has, multiplied in across multiples in the wrong direction for those valuations. What's the solution then, Arnhem? Can you just gold does pretty well. Do you just start plugging in stuff like gold? Do you gamble on a Bitcoin or something, or do you harness volatility to work for you?
Well, I think the biggest word here is really understand the correlations in your portfolios. When we speak with advisors, when we speak with funds that we advise and investors, we remind them that volatility has a pretty big range of acceptability, and we've actually seen that. It's not volatility that's really hurt investors. It's been when correlations fail.
You waited all day for that 200?
To stocks. Those are the places.
We got it.
So we look for assets, for example, hedged equity.
Triple top, 1, 2, 3.
Equity returns, but gives you defense, really kind of squeezes downside. There are, some commodities, you talked about gold. It has had some interesting characteristics, much more than Bitcoin, that have had some negative correlation. There are other types of products that you can build to replace some of that diversification that you've lost in this environment, with fixed income being positively correlated to equities.
One thing I know that your team has thought about, that you've written about, is the effort to hedge outside of just these like black swan events. A lot of people think about hedging as, oh, I need to hedge in case there's a big bad event. It seems like, from what I understand from a lot of your writing, that it's more about kind of maintaining peace in your portfolio on a daily basis.
100% right. I think we'd be wrong to say you need to get the next call right. Because the truth is no one knows, is the Fed actually going to ease once this year, pre-election? Are they not? Is our equities going to come down 5 to 10%? It's difficult to know. We know that we're in a growth economy, and traditionally when the economy, despite this first quarter number, which usually is weak,
we're always a growth economy, you idiot.
So you want to participate with equities, but you don't want to be subject to too much volatility risk, and you don't want to be subject to correlation risk. And the way you do that is by diversifying your portfolio through these kind of products. And you're right, usually 1 to 2 standard deviation kind of downdraft, which is this 5 to 7 area, is about what we get, and then we correct off of that. If you go through that area, then yes, of course, you can get a worse number. But the traditional pullbacks are in that range. And so you seek to defend those, and you want to maximize your income, I would say probably at the shorter part of the curve, so you don't expose yourself to the duration risk of the positive correlation of stocks and bonds.
Okay. And you mentioned hedged equity products. So I'm just kind of curious, do you find that new ETFs and funds were able to kind of capture that, or does it have to literally be like an overlaid strategy? Do you need like an outsourced risk manager for your fund?
Only very large institutions can run those kinds of things for themselves. The new buffer ETFs are interesting, but they don't really keep pace on a day-to-day basis particularly well. We find that the mutual funds that daily adjust their betas to the market are much more effective and give very satisfying results over time. And the big issue here is you want to always be hedged. You always want to be relevant. And some of the set it and forget it kind of buffers, they set their strikes at the beginning of the quarter, but there can be a lot of movement up or down through that quarter, and they can become irrelevant. And so we like the idea of the mutual fund that really keeps relevant with the market, resets, and trades systematically to keep that hedge in place, but still participate to the upside.
All right, Artem, thanks for the thoughts. Helpful for us to figure out how to try and correct issues as bonds disrupt the trade. Appreciate your time.
Thank you, Oliver.
Good to catch up. Artem Holzer, global macro strategist at Easterly EAB Risk Solutions, making the case to hedge the equity portfolio, not necessarily with bonds, though, and maybe look into what someone describes as alternatives coming up. Let's talk about credit, state of the economy, with the CFO of Innova International back with us after a pretty great year for the stock, especially in this past week, holding up through earnings, being rewarded for earnings in the middle of a broad market sell-off. We'll be right back.
ENVA CFO on earnings.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Being part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. It's available anytime, anywhere, on any device for free.
Right out of the gate, NVIDIA, inverse head and shoulders. Time frame. FSRN is up. Only got 3 people listening to me? 4? I might as well not even sit here and do this anymore. Go out and have a good time, play around. That's about it, man. About done with it. Okay. I don't know what that chilling thing is. What's chilling mean? Is that something new? Never seen it before? Me neither. Activity status. Show your friends what you're up to and setting up activity status. Well, I'm chilling too, man. In the zone. Huh. You're on YouTube and in the room live. Okay. Whoa! I take it back. FSRN, huh? She's not over here, franchise. I wouldn't take your woman away from you. That's one thing I don't do. And I tell you what I do. If I have friends that cheat on their wives, I'll disown them. I won't have nothing to do with them. Okay. We got. Does anybody know what the what do they used to call that? 2:30 comes in and I forgot what they called it. How many people were buying stocks or something? 3:30. Dang, this thing's at 2080 now. 2110. Woo! I'm making a killing on SPX today. Just from right here to right here is $500. Pivot levels on what? On anything, it's an no. What again? How do I use pivot points? There's called a Parson pivot point. Now, I look at it because I as a horizon line in a painting. But there's a place. Do you have TOS? Oh, pivot point. And Parsons pivot points. Right here. This is customized. You got support, pivot point, resistance, and resistance. This is called the Parsons pivot. Parsons pivot. This is a customized one. I forgot how I got it. Let me take this off. But it does it in each day. There's like the pivot point there, the pivot point there. We're still under support. Then this is the other one. Parsons pivot points. Here's the Parsons pivot point. We just now hit support. But see, I bought support way down here. My pivot point was right about in here. Because I read things differently. I'd rather read it myself than take an indicator, I think. Let me see here. What am I thinking? 5 minute. 5 day. It worked there. Parsons pivots. Yeah, it's about the same thing. But you like it? I don't like using it. Personally, I'm a lot different than a lot of traders. Many traders will just use indicators. And I personally draw out the charts, look for the pivot points, try to find the resistance levels. They're more custom to my algorithms than someone else's. But one thing about the market, we all try to trade the same. So that's like the VWAP. Everybody likes using the VWAP. Probably one of the most beastest indicators there is out there. And then on my TTM squeeze, on my Ready, Set, Go, I have pivot points and resistance levels. Already set up that gives me the numbers and stuff. So like today was right in here. Resistance levels, resistant. $235. I'm getting real tired. tired and getting old. I might. Oh, my laundry. I'll be right back. Washing my towels.
Bought 12,000 of the April 26th weeklies, the ones that expire tomorrow at the close.
Snap
The
after
10
earnings.
puts, average debit of about 75 cents on these. That was earlier this morning. Break even about 9.25 over the next 24 hours. That's about 19% below the current share price in there. So about that one standard deviation move. And yeah, put volume. There's a lot of call volume in there today, but this one kind of stuck out to me just due to the fact that the stock fell 34% last earnings.
God, things are 2,100.
I don't know. Is it going to take cost cuts in here? Is it going to have to be a year of efficiency? Because Evan Spiegel, the CEO,
They have that.
I don't know if he's got it in his in his pocketbook at this point.
Oh man. All right. Trading a 21% implied move. Stock is like sitting down with a single $100 chip at a $25 min bet blackjack table. Like, you're gonna have a good time.
Yeah.
You're gonna double up quick, or you're gonna be done real fast.
Yes.
All right. So it should be fun. Let's talk PayPal.
Yeah.
Someone actually willing to give them a chance here. They've got a little recovery going a bit on the chart.
Yeah, up only about 4% so far this year, but it's off of those multi-year lows that we've seen. This is another one that's got over 400 million people across all their platforms as far as use goes. The thing that really hurt the stock is that number has been slowly pulling back, and also the average revenue per user on their platforms is actually pulled back. So the total gross volume as far as payments continues to grow, but their margins continue to shrink on those payments. So that's not a good scenario for an old-time growth stock like PayPal. They report earnings next week on the 30th. So expectations pretty elevated going into that one, because I think a lot of people have been reassessing. The CEO recently came out, made some changes. They're going to try to go a specific direction within all their platforms that they have on the app. So that might be something. Transaction margins, they expect to reach about 44%. Estimate a year ago was 47%. So there you see some of that impact of lower margins for this company. But we did see some call buyers in here in the May 3rd weekly cycle. So 8 days to expiration. You're going to capture that earnings event next week. They bought 3,600 of the 68 strike calls for an average debit of $1.16. So that break even of 69.16 over the next week is about 7.5% above the current share price. But this looks like somebody sticking their neck out for an earnings play, expecting a surprise to the upside.
Okay. All right. Jump to 200, $10 for our next stock. All right. PayPal, I like it, but I want to hit Hilton real quick.
Yeah.
Because Hilton had a big run. Jumped to $210 on earnings. Came back down. What's the trade you got?
Yeah. Everything seems to be going right for them. They're off all-time highs, but still up about 5% so far just this week post earnings. You see that little bit of dip from those all-time highs above 215 that hit in early April. Their total revenues grew 12.2% in Q1 to $2.57 billion. They continue to add rooms to their portfolio. You know that travel remains robust. People are still out there traveling, spending, staying at hotels. So it's been a positive for Hilton. But somebody took a position that they had out in the June cycle. So post earnings probably did pretty well on this trade. They sold out of their long June 185 strike calls. These are deep in the money calls. And they took those proceeds and they bought 16,000 of the October 185 strike calls, created a hefty debit of over $28.30 on these. So the break even for this bullish trade, $213.34 over the next 176 days. So Oliver, they just rolled it out to give themselves some more duration on a trade that had already been working for them in the June cycle, rolled it to the October cycle, giving themselves 176 days in this one. The break even though these are deep in the money calls, only 4% above the current share price in there. 213.34 is the break even for this trader, right below those all-time highs. So somebody expects maybe over the next 5-6 months, we're going to see more record highs for this one. Call volume, we don't typically see a lot of option volume in Hilton. 27 times normal daily average volume on the calls because of that big position roll that they did in here and there. Buying some longer duration calls.
Very bullish.
Yeah.
Well, that's kind of why I thought it was secretly the most interesting one here. Hilton's doing great. I mean, a great chart.
God, that would have been a great trade.
Earnings, sold off going into the earnings, bounce back, and now someone's ripping calls.
And this is typically their lowest quarter as far as room sales, so pretty positive.
All right, market shrugged it off. Okay, thanks, Tom, for the trades. Bearish snap, but bullish in other places. Dip buying, very real.
Now, Randy made a
When we
point.
come back, let's get into the energy sector, talk some geopolitics.
Randy made a point today, and I said it, and then he said it. He said, all you got to do is learn how to trade off the 200. So Randy sat here and waited for that 200, and bam. He sat there and waited and waited and waited and waited and waited and waited, and bam. $200's coming again. Will it hold? How late of the day is it? This thing ran like $500. You see these here trend lines right in here? I want to know where resistance to break is. So I'm going to take that candle right there and that candle right there. So as we came down, that was my first resistance to break. This is my second one. Now watch. Touch, 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 touch. So what is that? That's a head and shoulders. So that's a hard resistance. It might be hard for it to break that and come back down and hit this 200 again. So as you go up, you got to ask yourself, do I want to try to take this above this head and shoulders, or do I want to get out right now? Right now. Because the head and shoulders is a resistance. Left shoulder, left shoulder, left shoulder, and create a right shoulder, and then come back down and poop out. As we go closer into the day, and we've already had our run up. Watch it pull back. I was telling another room, I said, you got to teach yourself how to read into the future, how to predict its next move. Watch it come back and hit the 200. So you see patterns and take advantage of them patterns. It come back down here. See, as it gets closer to the end of the day, I've had too good of a day today to where I don't even want to take a risk. I'm waiting. I'm waiting. So I decide I want to go look at something here, so I'm going to set me an alert. Then this won't keep me occupied on this chart. Now I'll set another alert at the double bottom. Right over the body of that candle. Dadgummit. So I got two alerts set. That's a double bottom out of a snake. Snake breakout. So what you got to do is you got to draw it in, and to tell if it's really going to be bullish or not. So we're still bearish. Don't become bullish until you break out of this here trend line. So I would not take the trade yet, not this late in the day, until it hit the 200, and then by that time it'd be too late. It's 247, 347 right now. So you understand, before you would take that trade that you thought would maybe be a good tweezer bottom down here, and you've seen that there's a little head and shoulders, it's not very big of a spread to try to take a risky trade. It would be, not a good idea. Now we did bounce off, my alert did trigger, but I told myself I didn't want to take it. What was I getting ready to think? Oh, I'm waiting for the 200. That's really going to hurt the margin. But it's Wall Street and Main Street have two different opinions on Tesla. I'm a lover of Elon Musk. I got an idea. I've been following the stock for a long time. So this is in tradable
That's pretty
area
funny.
right now. The fat cats kind of look numb the way they were talking about it. They were expecting, people got this thing going down to 115, 120, 100, even, and there's a lot of, the 20-day, 1 hour, we had a snake breakout. We're going to try to pull this thing back to this area right in here. and create a right shoulder
154.27.
Of inverse head and shoulders. That's your right shoulder right there, and it runs into the 63 EMA.
Not even
on the 1
close.
hour time frame. So set your alert right above. You want to look at these candles and try to find a little place above it to where you can hit that. And I'm going to set this alert right at 156.05.
We were close.
Prepare. Once it hits that, I'll be watching it and see if it wants to go ahead and touch that 63.
156.
By that time, you know, the stock, the moving
pretty
average
close.
will be moving up some.
It was the
So
triple
whenever it
bottom.
comes close
That would
to
have been a
63. I'll
that'd
try
have been
to
a good
jump in that
trade.
Trade and call it a inverse head and shoulders. Left shoulder, right, and then it could come down, come back up, and then pull back down again, and create another right shoulder like it did here. So pay attention to that. Comes down and hits the shoulder once, comes back up, a little lower high, comes back down and hits the shoulder again, and then see if it doesn't break out to the upside. That's going to be Tesla. So definitely set your alert at 156. NVIDIA is going to be, people, you know, we got another snake, breakout, pull back, and we should come back up to the 200 probably today. And that's right around 847. I would.
So that's Netflix. I said 847. What? No, NVIDIA. God. So I'm a little off on that one. It said it would come back up, so I was right about that. So I think I nailed that one. 841.73.
Consider hitting that 200 SMA, the 200, the 200, the 200, the 200, the 200. And we come back up here and do a double top and get out of that trade.
147.
842. If it breaks,
141.
I mean, you got a lot of good upside to this stock. It is consolidating. I think we called out the 3 black crows here. Nice little bounce. Now it's come back. So we've got snake, breakout, pull back, higher low, back to the 200. NVIDIA.
It'll probably get to the 200.
SPY. I love trading the SPY. We got a falling wedge, breakout, pull back to an inverse head and shoulders. Go ahead and put your trend line right. Well, okay, I'm going to show you 2 things here. Diagonal. I mean a horizontal. 499.75 support. You got your left shoulder. You got your head. And you've got your right shoulder. Come down and touch that. Do the same thing. Come and try to break that 200 on the 1 hour. Now, the other one is to take this line, get that shoulder right there, and then run it up through here. We've got shoulder, resistance, resistance, and support. So this thing could easily squeeze on out and break up to the resistance level of this pullback right here at 513.11 today. This is an inverse head and shoulders. I call this out all day long. I scalp this trade. I make good money on it. It's pulled back. We've had the snake breakout, pull back, higher low, This could be a good trade today. The SPY. Watch the SPY real close at open. Let it break out, pull back, and then jump in the trade once it forms a flag. Break out, pull back, form the flag. Boom! Snake, break out, pull back. Now, why did Amazon go down? Jeff Bezos reveals his unconventional approach to productivity. Meta, IBM, Amazon, 5 stocks on the radar today. JP rates outperformed on Amazon, maintains a 225 price target. I mean, this was yesterday. JP Morgan unveils AI capabilities. Yeah, this is oversold. This will be a good trade today. Damn. Amazon. Didn't look too good today at all. Keep a good eye on Amazon. I mean, yeah, it looked good. We're going to pull this up to the 1 minute right now, but I want to draw a resistance line from this previous pullback. Nailed it. The resistance. I'm not bullish. I'm bullish because of the momentum and the way the fat cats are running up this market. I mean, we're still way overbought, and I'm going to keep playing that same game. But I want to show you something here on the SPY. Here, after I go back to the SPY, I want to show you something. The market, these people are acting very irrational. They're not acting, they're acting extremely greedy right now. I've been watching that stock market every day for 20 years, every single day. Maybe had a week off, maybe a couple weeks through that whole period. Come on, get on with it. So we're going to bring us to the 1 minute. We could double bottom at the 170, 174, maybe right around 170, 185. Set your alert just a little bit above it. Inverse head and shoulders. I usually use a 3-day rule on something like this, which means after sales or after some knife or some event. But we're going to see today how this thing turns out. I mean, I like catching these knives on these companies that have money and that have, that are high volumed and they're talked about every day. Trading these penny stocks, it's great to trade penny stocks if you know how to trade. But some of these stocks, man, they're up so damn high, they're going to pull back. And you just I've been saying it for 2 or 3 months, and if you followed my plan, you'd be making a killing right now. We are overbought. Way overbought. Still. But when we have these huge pullbacks, they're great opportunities to scalp and day trade and pick up on the momentum of the market. I'll show you exactly how you can do that by pulling up the SPY. Pull this up to a weekly time frame. I'm going to clear everything out. And I talked about this for months. I said this market's had way too big of a run. It's not normal, and we're going to pull back. And if you want to be smart about this, if we do not hold the 9, that was the second week of the pullback, we will land on the 21 and bounce. I got videos, I've talked about it for months, for weeks. And we can pull back to the 63 EMA if the war gets worse than what it is. If Wall Street's blaming Iran on this, I'm not. I'm blaming it on an overbought market. I've been here 20 years. I'm not seeing anything like it. I'm playing it just perfect. I've had a couple bad trades, but man, 95% is pretty good. So I'm extremely cautious here. at an extremely greedy level during war times, during a president that can't speak 5 words in a straight sentence. So the 21 EMA will be your support, and your resistance to break will be the 9. We could keep playing in this channel and go sideways and create a symmetrical flag, and then maybe have a down tick. So just be very careful to this previous high, and that will be a strong buy to really put your money back in the market. Around 457.86, and that'll be oversold by then. As long as we stay above 500, we're still bullish. If we go below 500, you got to be a little bit more cautious and wait for that next support level. If it stays below that over a day. So that's the trick. We're squeezing right now. We could have another day at a bull flag. You want to be whip on some of these. I mean, there's a lot of good trades in here right now. Apple yesterday had a good day. We've had a huge pullback on Apple. It's a bull flag. We have a 1, 2, 3 setup. What is a 1, 2, 3 setup? I get a knock on the door. Hey Jim, what's the 1, 2, 3 setup? I hear you talk about it all the time. It's all about the squeeze. You want to be, it's like a baseball bat, I compare it to. The baseball bat has a sweet spot. So does this. And the sweet spot is on the number 3 or the number 4. So you're looking at a bull flag. This is on a weekly time frame. Just barely touched, barely. So that's a higher low. You got the body of that candle, the body of that candle, and you've got a higher low, which is a beginning of a breakout, which we created this week with a tweezer bottom. So you want to run it up to the 9 and find some kind of resistance at right around 172. And that'll be your exit idea, unless it gets some kind of news and wants to go ahead and break out of this 1, 2, 3. So you count to 3. 169.02,
1,
169.89,
2, and we got to wait for that 3rd spot. And if it doesn't break out there, it pulls back to the 4th time. You know, you're starting to look real weak. But if we pull back, 3rd time, because this is a higher low. So you still have a chance for it to pull back and hit this trend line and stop there and then come up and break out. So right now you have 2 options. We break out from the higher low, which is on this here trend, to the upside for a resistance. And if we don't break that, we get out. Or it pulls on back and finds some.
What I mean by higher low is you got the body of that candle on that trend line, you got the body of that candle on that trend line, but you do not have the body of that candle on that trend line. So that's a higher low, and that could be an indicator that you could push up to the upside.
Support off this line, and then we jump in the trade and run it on up to the upside. So go in small, it starts to.
So today, I called the reversal on Apple. Right out of the gate, boom, pull back, double bottom, double top into close. I'm bullish on Apple just because where we're sitting and how long it's sat around, and we're at the number 1, 2, 3 on the flag. So Jimmy says he's bullish. Come in this morning, you're sitting here, I get a knock on the door. Hey Jim, man, that Apple broke out this morning first thing and they're pulling back. What should I do? Well, let's look for an inverse head and shoulders and take the trade. What do you mean inverse head and shoulders? You have your left shoulder, you have your head, and you have your right shoulder. Jim, It came back and touched that right shoulder like you always say. And I jumped in the trade, and I'm still in it. I'm going to buy you a trip to Mexico. So that's a bullish flag. You got your sweet spot and resistance to break is going to be 177.38. Now we did break a double top just now after hours. So what happened here? You get some news or something? What's going on? Earnings? I didn't know earnings were out. Spotify update. Market. Apple asks to address concerns over alleged use of conflict minerals from Congo. Uh-oh. Did you know that the Democrats have slave owners in Africa? Kids digging for minerals? Toxic minerals? America. Joe Biden. You just got to type it in. What is cobalt? And child labor. How modern day slavery in the Congo powers the rechargeable battery economy. So you ought to call your senators and rag them out. They talk about slavery and they talk about this and that, and they're still doing it. The Democrats. I'm not for this at all. But that's the way it is. Pushing this damn EV sector on us. Not letting the private sector figure it out. So that's about it. I'm very excited. So far, we're still bullish, and we'll catch you all later. They're hot now. Whoa. We'll see you all later.